हेलो एवरीवन, गुड आफ्टरनून, गुड मॉर्निंग, गुड मॉर्निंग टू ऑल ऑफ यू। स्टार्ट करते हैं आज का सेशन। कल मार्केट ठीक ठाक था, अच्छा था। लेवल मैंने बनाए थे, कल स्ट्रीम थोड़ा जल्दी एंड कर दी थी, शाम को 5-6 बजे के आसपास। सपोर्ट पे था, सपोर्ट पे आया था, वहाँ पर बाइंग हुई एंड मार्केट ने लगभग लंदन सेशन ओपन होने के बाद एक काफ़ी अच्छा स्पाइक दिया था ऑलमोस्ट। वो लेवल से याद होगा, ये लेवल, ये नीचे वाला लेवल ना, 15 मिनट का लेवल नहीं है, मैंने उस दिन ही बताया था। दिस इज़ 4 आवर टाइम फ्रेम लेवल। और मार्केट ने वहीं से सपोर्ट लिया और सीधा सीधा 300 to 400 पॉइंट मूव किया। एक बहुत अच्छा ट्रेड था। फिर ऊपर रेजिस्टेंस था, वहां से सेलिंग आई एज एक्सपेक्टेड, इतना ही एक्सपेक्ट था। फिर थोड़ा बहुत और आगे उसके बाद साइडवेज चला गया। लेट्स सी कोई नए लेवल बनते हैं, तो अभी तो बिल्कुल साइडवेज है। लंदन सेशन के बाद न्यूयॉर्क सेशन ओपन होने वाला, लेट्स सी कोई ट्रेड बनता है तो आई होप कल अच्छा ट्रेड लिया होगा क्रूड ऑयल में। नेचुरल गैस की बात करें तो नेचुरल गैस में भी ये लेवल थे, ये तो 15 मिनट की लेवल है। नीचे एग्जैक्टली आया नहीं, नहीं तो यहाँ पर भी एक बाइंग का ट्रेड था, किसी ने ले लिया होगा तो अलग बात है। अदरवाइज यहाँ से एक बाइंग का भी बहुत अच्छा ट्रेड मिला था। ऊपर रेजिस्टेंस था, वहाँ से सेलिंग आ गई थी मार्केट में 2 बार क्लोज होते होते। दैट इज़ अ वेरी ग्रेट ट्रेड क्लोज होते होते, क्योंकि नीचे देखो एक्जैक्टली सपोर्ट पे आया नहीं था, तो उसको आना ही था वहाँ से। अगर ये यहाँ पर टच करके चला जाता तो फिर जाता नहीं। और अभी उसी सपोर्ट पे रुका हुआ है, बाइंग थोड़ी लग रही है नीचे सपोर्ट पे। लेट्स सी थोड़ा बहुत ये यहाँ पर रुकता है तो कोई नए ट्रेड के लिए। बाकी कोई डेटा शेड्यूल नहीं था कल, आज भी कोई मेजर डेटा है नहीं शेड्यूल। कल रहेगा आपका इम्पोर्टेंट यूएस का, आपका इन्फ्लेशन का डेटा आएगा, शायद एफओएमसी मिनट है, परसों यूएस का इन्फ्लेशन का डेटा आएगा, विच इज़ वेरी इंपॉर्टेंट। बाकी इंडियन मार्केट ने भी काफ़ी अच्छा कल थोड़ा बहुत गैप डाउन किया, सेल ऑफ आया था, रिकवरी कर गई थी इवन दो गैप डाउन के बाद। आज सीधा गैप अप, हल्का सा सेल ऑफ आया लेकिन रिकवरी कर गई। बहुत ही अच्छा मार्केट था कल और आज दोनों ही दिन। लेट्स सी अब थोड़ा साइडवेज रहता है तो। बाकी कल लाइव जैसा मैंने कल बताया था, मैं थोड़ा कंटिन्यू रख नहीं पाऊंगा इस वीक में, सिस्टम पे मैं नहीं हो पाऊंगा। स्ट्रीम जितनी देर चलेगी वो बात अलग है। लेवल थोड़ा बना के दे दूंगा, कोई क्वेश्चन होगा तो पूछ लेना। आज तो लाइव स्ट्रीम कंटिन्यू करेंगे। लेट्स सी कोई नया ट्रेड अभी यहाँ पर बनता है तो ठीक है। एक सेकंड दे दो, यहाँ देख लेते हैं। बाकी कोई और मेजर न्यूज़ तो अभी फ़िलहाल के लिए है नहीं। बाकी वो एक न्यूज़ आई थी, वो आप लोगों ने देख ही ली होगी, विच इज़ चाइना पे जो सैंक्शन लगाए थे यूएस ने, टैरिफ। थर्ट कितना 52% लगाए थे शायद, कितने लगाए थे पहले टोटल मिला के। रेसिप्रोकल टैरिफ चाइना ने लगा दिए 37% समथिंग। अब ट्रम्प ने कहा है कि अगर चाइना ने कल तक वो टैरिफ नहीं हटाए तो हम 50% और एक्स्ट्रा लगा देंगे। तो अभी और जाने वाली है ये फाइट, देखते हैं कितना ऊपर तक ये लोग लेके जाते हैं इस वॉर को। बाकी और भी जो मेजर कंट्रीज़ हैं, इसराइल, इंडिया, उसने अभी तक कुछ भी रिस्पॉन्ड दिया नहीं है, तो मुझे लग रहा है कि वो नॉर्मल ही रहेंगे। नेस्डेक का एनालिसिस देखते हैं अभी थोड़ा सा। नेस्डेक का पहले क्रूड ऑयल और नेचुरल गैस में देखते हैं कुछ और नया ट्रेड बनता है तो। यहाँ पर गुड मॉर्निंग, गुड इवनिंग। लाइक भी करते रहो गाइस, रुकना नहीं है। डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। जिन लोगों ने सब्सक्राइब नहीं किया है फटाफट से सब्सक्राइब भी कर दो चैनल को। कोई क्वेश्चन होगा तो कमेंट बॉक्स में पूछ सकते हो फिर। हाँ कल अच्छा था ट्रेड, कल ये क्रूड ऑयल वाला ना एग्जैक्ट सपोर्ट पे आया। नेचुरल गैस भी आता था, नेचुरल गैस का भी अच्छा हो जाता, किसी ने लिया तो होगा, आई होप सो। यहाँ पर एनीबॉडी टुक द बाइंग ट्रेड इन नेचुरल गैस एज वेल। क्रूड ऑयल का तो एग्जैक्टली हिट किया था, तो अच्छा खासा 400 पॉइंट मोमेंटम कैच हो गया था एक बार में। और किसी ने सेल किया होगा उसको भी 200-300 पॉइंट तो मिल ही गए थे, 250 पॉइंट तो मिल ही गए थे क्लोजिंग होते होते। नहीं अभी तो कोई ट्रेड नहीं है, देखते हैं कुछ बनता है तो। नेच क्रूड ऑयल में फिलहाल साइडवेज है। नेचुरल गैस सपोर्ट पे था कल वाली, ये कल की लेवल है, लिया हुआ है नेचुरल गैस तो होल्ड कर सकते हो। कोई नया ट्रेड के लिए वेट करना पड़ेगा। एक बार थोड़ा सा डिटेल एनालिसिस देख लेते हैं। लेट्स सी द न्यूज़ फर्स्ट। अभी तो कोई ट्रेड नहीं है, एक बार न्यूज़ ऑफ द आवर देखते हैं क्या है, कुछ न्यूज़ डेवलपमेंट।
न्यूज़ news when you want it with Bloomberg News Now. I'm Karen Moscow. Well, markets look set for a turnaround as President Trump continues to send mixed messages on trade. Futures are higher this morning and bonds are stabilizing after a volatile start to the week. In Oval Office remarks heard on Bloomberg, the president threatened a 50% tariff on China if it doesn't pull back on a 34% U.S. tariff. At the same time, Trump says he's willing to negotiate.
We'll be talking to China. We'll be talking to a lot of different countries. And I think, if we can make a really fair deal and a good deal for the United States, not a good deal for others. This is America first. It's now America first.
President Trump is not saying what a fair deal would look like, and he did not answer when asked if he'd consider lowering rates below the minimum 10%. China is vowing to fight to the end if the U.S. insists on imposing higher duties that are set to kick in tomorrow. Treasury Secretary Scott Bessent said that he hopes tariff rates will come down as negotiations get going with U.S. trading partners. He made those comments on Fox Business yesterday and spoke again this morning on CNBC.
I think we're up to 70 countries contact the White House for how to come and negotiate. So, I would say that the negotiations are the result of the massive inflow of inbound calls to come and negotiate.
And as Treasury Secretary Scott Bessent, while some Wall Street titans are expressing opposition to Trump's tariff policy, Bloomberg's John Tucker has more. John.
Good morning, Karen. Billionaire Ken Griffin, a Republican mega donor, says President Donald Trump's latest tariffs amount to a hefty tax on families and are a huge policy mistake by the administration. Larry Fink, head of the world's largest asset manager at BlackRock, told a gathering of chief executives and investors in New York, as heard here on Bloomberg Radio, the U.S. economy is weakening as we speak, warning that the market turmoil triggered by Donald Trump's tariffs is rippling across corporate America and the world.
I am troubled by that we are not the stabilizer as a country. We are destabilizing. And I think this is what the financial markets are trying to grapple with.
The highest profile break with Trump over tariffs may be Elon Musk. The Washington Post reports Musk has made personal appeals to the president, going over the heads of other administration officials. Over the weekend, Musk took aim at the administration official who's been key to developing the tariff plans, White House trade advisor Peter Navarro, and questioned his credentials. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. And speaking of Musk, his wealth continues to take a pounding over the last few months, while a fellow billionaire is weathering the storm. And we get the very latest with Bloomberg's Lisa Mateo.
It is quite a hit for Musk. His fortune fell to almost $298 billion on Monday when he lost nearly $4.5 billion after Tesla stock extended its losses. Now, it's the first time his net worth has dropped below $300 billion since November. It's his role as advisor for President Trump. It's really made Tesla this target for protests and vandalism. But believe it or not, Musk is still the world's richest person, despite losing nearly $135 billion so far this year. Now, on the flip side, we have Berkshire Hathaway's Warren Buffett. He's among the rare few winners after the president's tariffs triggered this sell-off. His net worth has climbed $11.5 billion this year to nearly $154 billion. That's according to the Bloomberg Billionaires Index. And that's despite a $14.5 billion decline since April 2nd, when his net worth reached its highest level in 5 years. Now, experts say it shows how the property and casualty sector remain pretty much protected from global trade. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Democratic Senator Elizabeth Warren is lashing out at President Trump's sweeping global tariffs, saying they risk throwing millions of Americans out of work. The Massachusetts Democrat says she fears a recession.
Look, I am really worried about whether we are already in a recession or just right on the edge. All of the lights are flashing red. And Larry Fink points this out, but he is not the only one. There are a lot of folks who are starting to say this, and a lot of evidence in that direction.
And Democratic Senator Elizabeth Warren made the comments on Bloomberg's Balance of Power. Hear the full interview on the Bloomberg Talks podcast or watch it on the Bloomberg podcast page on YouTube. In other stories, we're following Iran is saying it'll start high-level talks with the U.S. and Oman this weekend. The comments from the country's foreign minister confirm President Trump's announcement that they're planning to meet to resolve a standoff over Tehran's nuclear program. Russian and U.S. officials, meanwhile, will hold fresh talks in Turkey's Istanbul on Thursday. Walgreens Boots Alliance reported quarterly profit that exceeded Wall Street expectations, marking a strong performance in what's likely one of its last quarters as a public company. And U.S. small business optimism fell last month by the most since June 2022. S&P futures are higher, up 1.7% this morning. Dow futures up 2.2%. NASDAQ futures up 1.6%, and the 10-year Treasury yield 4.18%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Something unexpected happened after Jeremy Scott confessed to killing Michelle Schofield in Bone Valley Season 1.
Every time I hear about my dad, it's, oh, he's a killer. He's just straight evil.
I was becoming the bridge between Jeremy Scott and the son he'd never known.
At the end of the day, I'm literally a son of a killer.
Listen to new episodes of Bone Valley Season 2 starting April 9th on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
ओके तो गाइस क्रूड ऑयल में देखो यहाँ पर एक ट्रेड प्लान करते हैं, ठीक है। देखते हैं, अभी नेस्डेक का भी देखते हैं, पहले क्रूड ऑयल और नेचुरल गैस का देख रहे हैं अभी, उसके बाद नेस्डेक का देखते हैं, ठीक है। क्रूड ऑयल में देखो यहाँ पर क्या कर सकते हैं, एक वॉल्यूम तो है ना, वॉल्यूम है, प्रॉब्लम नहीं है ये। 5:30 हो चुका है, न्यूयॉर्क सेशन ऑलरेडी ओपन। तो 2 दिन काफ़ी वॉलेटिलिटी रही है, कहीं ऐसा ना हुआ साइडवे चला जाए, क्योंकि कल और परसों एफओएमसी मिनट्स भी रिलीज़ होने वाले हैं, तो थोड़ा क्रूड ऑयल को ध्यान से रख के रेट करेंगे, मिडिल ऑफ द लेवल ही कुछ ट्रेड मेरे अकॉर्डिंग बन पाएगा, अदरवाइज तो चांसेस कम ही रहेंगे। कल का हाई देखो रेजिस्टेंस है, वहाँ वापस सेल किया सकता है, कोई डाउट नहीं है। वापस अगर यहाँ आया तो यहाँ सेलिंग बनती ही बनती है, बट हम एक बार देख लेते हैं कि पहले बाइंग के लिए जाएगा भी ऊपर या फिर गिरता है यहाँ से नीचे वापस, क्योंकि मॉर्निंग से देखोगे ना कोई ज़्यादा मोमेंटम हुआ ही नहीं है जैसा कल हुआ था। कल जैसा मोमेंटम हो तो फिर मज़ा ही आ जाए। कितने सालों बाद ऐसा मोमेंटम हुआ कि इंट्राडे में 300 350 400 पॉइंट मूव कर जाए। आज देखोगे अर्ली मॉर्निंग से डे हाई डे लो 100 पॉइंट की रेंज में घूमा है बस मार्केट क्रूड ऑयल का, तो थोड़ा सा चॉपीनेस कह सकते हैं, स्टिल कंटिन्यू है। लेट्स सी, ये लेवल भी ठीक ही है, ठीक है। बढ़िया। ओपन अकाउंट, इसको भी हटा ही दो, बीच में क्या ही ट्रेड लगाएंगे इसमें। ठीक है, थोड़ा सा ऊपर आता है तो यहाँ सेल करेंगे कल के लेवल पर ही, यहाँ से एक सेलिंग का प्लान रखो। थोड़ा सा ही रह गया अब, बाइंग का लेवल मेरे अकॉर्डिंग तो निकल गया इसमें, अब एसएल बड़ा हो जाएगा, ऊपर सेलिंग ज़्यादा बेटर है। ठीक है, क्रूड ऑयल में ये लेवल है ऊपर येलो कलर का जो बॉक्स बना हुआ है, यहाँ से एक सेलिंग का प्लान रहेगा। कैंडल का ध्यान रखना, ओपन इक्वल टू हाई लो ना बने बस, बाकी चलेगा, कोई इशू नहीं है। बाकी ऊपर तो आना ही पड़ेगा इसको, सेलिंग करनी है तो। अगर बाइंग के लिए कुछ कर सकते हैं क्या? ओके ठीक है, देखो एक बाइंग थोड़ा सा लेवल ऊपर निकल गया, एक बाइंग भी करें यहाँ पर, ऐसा थोड़ा बड़ा हो जाएगा, लेकिन कितना हो रहा है? एक सेकेंड, यार बहुत बड़ा हैसल हो जाएगा यहाँ पर, एक बाइंग करेंगे तो थोड़ा पुल बैक दे दे अगर क्रूड ऑयल तो बढ़िया है, अदरवाइज तो हैसल काफ़ी बड़ा हो जाएगा यार, ये बहुत बड़ा हो जाएगा, लॉजिक ही नहीं बनता इतना। इतना बड़ा हैसल कौन लेगा भाई? यहाँ ना स्विंग स्विंग के आसपास यहाँ पर एक बाइंग का प्लान है, अगर आ जाता है नीचे तो वेल एंड गुड, नहीं आता है तो फिर ऊपर का वेट करो, और कुछ कर नहीं सकते खास। और किया भी क्या जा सकता है इसमें, नहीं तो यहाँ लेवल ही नहीं है बिल्कुल भी, और फिर और नीचे का लेवल है, सपोर्ट से ऑलरेडी कल बाइंग आ ही गई है, तो अब कुछ बचेगा नहीं। गाइस नहीं होता वो तो आई थिंक। ठीक है, इन दो लेवल पे ध्यान रखो, ऊपर का कल का जो रेजिस्टेंस है, नीचे कल का सपोर्ट। एंड और क्या बनेगा इसमें, कोई नया लेवल और बीच का कुछ बनता है तो फिर उस पर फोकस रखेंगे, अभी के लिए इतना ही है। सही बात है। जैसे ये है ना, इसमें इस वाले लेवल के अराउंड ये देखो। ठीक है, सिमिलरली यहाँ पर है। हाँ ये देखो। तो सेकंड टाइम ही आएगा अगर आता है तो ना, और उसमें भी आई थिंक फिर ठीक है, यहाँ से देखते हैं क्रूड में। ओके, दो पॉसिबिलिटी है, दो या तीन पॉसिबिलिटी, या तो ऊपर जाए रेजिस्टेंस अच्छा यहाँ से सेल करो, नीचे आए यहाँ से बाई करो, बीच में एक लेवल ये भी कंसिडर करेंगे। वैसे यहाँ से सपोर्ट तो ले लिया प्राइस ने, फिर भी रुकना तो चाहिए थोड़ा बहुत, यूएस मार्केट से पहले ही आ जाए, बिकॉज कोई डेटा भी नहीं है आज। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। बाकी नेचुरल गैस में कोई डेटा नहीं है तो लगा नहीं रखा है, ठीक है, डेटा का। नेचुरल गैस भी देखोगे फिलहाल कंटिन्यूसली, कल मोमेंटम करने के बाद आज पूरा दिन भर साइडवेज रहा, ऊपर से नीचे से बाइंग आई फिर सेलिंग आई, नीचे सपोर्ट था, ले लिया है सपोर्ट वहां से। कोई बाइंग में है तो ट्रेल करो, फ्रेश एंट्री इसमें भी बनाते हैं कुछ, अगर बाइंग की या फिर सेलिंग की वापस बनती है तो इसको भी रिमूव कर देते हैं पहले। लेट इट गो। ऐसा करना होगा। यहाँ पर एक चांस मिल सकता है इस एरिया में। ब्रेकडाउन अगर हो तो उस केस में ही हो पाएगा, अदरवाइज तो। नेस्डेक को देख लेते हैं अब एक बार, 15 मिनट टाइम फ्रेम पे अगर चार्ट शो कर रहा है वहां पर पीछे, ये है ना, ये देखो, परफेक्ट एग्जांपल। ये कैसे हो गया? This one, look at this, perfect save. नहीं तो फिर ये सेलिंग है ना, इसमें हुआ ही कहाँ पे? ये तो नहीं, एक बार में होना चाहिए. ठीक है, नेचुरल गैस में देख रहे हैं.
Point for the entire administration. And I have a thesis that says it's really only about China, right? It's building a blockade of partners who can take on China, and they will be the last one to negotiate out there. The other part, which I've heard a couple of your guests talk about, is this fear of recession. So Apple gets hit with the double whammy. They get hit with the Chinese manufacturing hit up to 104%, and then they get hit with a potential recession risk. And if you want to put a trifecta in there of increased prices, it is a very gloomy short-term view on Apple that investors so far aren't incorporating.
Patrick, is Apple uniquely positioned in a poor spot, given the fact that they are kind of hamstrung with production and, frankly, also selling into China at the same time that they are a consumer-facing tech company with the iPhone? Are they uniquely in a bad position relative to the other large tech companies?
They're very unique, and we've segmented our list into most at risk, potentially at risk, and least at risk. And they are at the most at-risk company related to China for the very reasons that we've outlined on the show today, with the adder that you just laid out there, that the Chinese consumers have a voracious appetite for Apple products, and they get hit on the reflexive tariffs from China, and they get hit on the tariffs coming into the United States. So somewhat free trade for Apple is limited to Latin America and Europe at this point.
Patrick, I'm pleased that you separated tariffs and the cyclical downturn that we might expect, and the two headwinds for certain companies. Something I think about from time to time, and I'd love your input on, is whether these companies in their current form have ever really been tested by a cyclical downturn here in the United States. And I don't think the pandemic counts, because we had so much stimulus flushed into the system. How do these companies respond to a cyclical downturn? Because for years people said, keep buying, it's a secular growth theme. Keep buying, it's a secular growth theme. How do these companies stand up to a cyclical downturn here in America?
Yeah, I'm glad you separated out the pandemic, because it was a very different type of scenario, but we haven't seen a full-on recession since 2008 here in the United States, and I would expect the same gameplay to happen, where we would have massive layoffs, prices would go down, interest rates would go down to stimulate the economy. I think we would see probably at least a point reduction once we're knee-deep in a recession to stimulate it. But the challenge here, though, is, again, we're trying to figure out what the administration actually wants. Do they want a systemic change, or do they just want a better deal? You can't build a complex factory in the United States for 1, maybe 2 years at best, and then you've run out of people to actually run those factories. We're already at very low levels of unemployment, and workers just in the United States just don't want to do this type of activity. You would see likely a lot of hugging and kissing between the United States and Mexico, right? Mexico is the next best alternative to these very highly tariffed countries to be able to lower the overall cost. If you look at the wages between Mexico and, let's say, Southeast China, they're still twice as much, but you're still looking at around $5 per hour. So that's the way I expect this to play out. A lot of doom and gloom, a lot of layoffs, and probably a down economic environment that we haven't seen in 25 years.
We hope to avoid it, but that's your base case at the moment. Patrick, thank you, sir. Patrick Moorhead of More Insights. Appreciate your time. It takes a long time to engineer that supply-side response. Higher prices are a key feature of engineering that supply-side response. In the meantime, though, who's going to build that factory right now when you are muddling the message around Washington, D.C., saying this might be a negotiation, these might be new rules of the game? I think a lot of people might wait.
How many times have we heard this from Mike Wirth of Chevron? The long time that it takes to make investments and that predictability of policy is the most important thing that they need for that long-term type of plan.
It certainly goes beyond the term of this presidency as well, when the rules could change again, and this is another issue for everyone. On the S&P 500, up by 2.5%. Up next on the program, Nancy Lazar of Piper Sandler, Martin Orton of Empower from New York. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
The open about 60 minutes out. Equities near session highs up 2.6% on the S&P 500. On the Nasdaq, up by 2.5%. Also, on a Russell, the small caps up by 3. 1 hour away from that cash open with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. Kicking it off with the biggest mover to the upside for the S&P 500 pre-market. That is Humana, the health insurance giant, up 16.2%. This comes from a decision after the close yesterday from the Trump administration to significantly increase the Medicare payouts for private insurers. $25 billion. That exceeds even the most optimistic of estimates. So Humana, CVS, United Health, all those are higher in the pre-market. Broadcom also higher. That is up 5.75% this morning. A $10 billion buyback that they are putting into this market. Remarkable for a company that is highly exposed to international supply chains in the midst of tariffs. Even so, they are doing this vote of confidence after their stock slid some 30% year to date, so a whole lot cheaper to buy things back. Levi's also reporting earnings. This is an interesting one because it's really the first retailer to do so in the face of tariffs. And people have been looking, what will they say about tariffs? What does the C-suite say? Well, you can see by the reaction, they had not too negative comments, 13% rise pre-market. They maintained their outlook for 2025, but here's the rub. They said that assumes that there's no deterioration in the macro environment, in consumers, in supply chains. They admitted that they're having a hard time analyzing just the impact of tariffs, and they have now assembled a task force to try to understand that. John.
Danny, do you think in the boardroom when they came up with this idea, do you think they realised how effective it might be? Looking at that gain in that stock?
Well, look, it worked because I think the assumption was that they would come out and say things are looking really dire for us, but they didn't do that. In fact, John, they said that this quarter tariffs have a minimal impact. It's gotten people excited, but what happens when they actually need to incorporate the outlook?
Danny, thank you. That stock is up by 13%. Bramo seen. Everyone looks at that and they're like, playbook, let's go. So they come out on the calls over the next several weeks and months and say, we assume no change to the macro outlook off the back of the policy changes down in Washington.
You have to wonder how much collectively Wall Street looks at that and says, whew, that sounds great, cool. Or how much people say, what are we talking about here? I can imagine, based on the rhetoric that we've heard from a number of executives, whether it's J.P. Morgan's Jamie Dimon, Ken Griffin of Citadel, or frankly, Larry Fink of BlackRock, telling Eric Schatzker of Bloomberg at the Economic Club yesterday that most CEOs he speaks to believe that we are in a recession currently. How do you square that?
Equities right now, session highs. That's how we're squaring it at the moment. Busy week ahead. More tariffs set to take effect overnight. Fed minutes as well, just around the corner. And some eco data through the week. Mike McKee has it all. Good morning, Mike.
Good morning, John. Well, the problem with this week's data and the Fed minutes is they're very backward-looking, and the whole situation has changed. To start looking forward, we're not going to get a lot of information for the Fed to make decisions on this week. Even if we get some movement in the CPI or PPI, we might get some initial tariff reaction in that. I would point you to Friday's Michigan sentiment report instead. See how Americans are reacting to the latest news. It will have data through Liberation Day, and it will have the tariff impact on inflation expectations. So Friday, look for the University of Michigan. Then next week we go to, on Wednesday, we get retail sales. That'll be important to see if people have started to cut back, whether or not there are tariffs, and that could influence the Fed. The Fed's going to have to wait and see at this point whether inflation or growth take precedence under tariffs, or whether we even have tariffs. So I wouldn't expect a whole lot out of this week to move a lot of Fed thinking.
The same debate just continues. Mike McKee, thank you. Fed officials, to Mike's point, going around worried about upside risk to inflation, potentially downside risk to growth. Nancy Lazar of Piper Sandler seeing tariff-related inflation as a one-off and saying, quote, easing aggressively now would risk a sharp inflation re-acceleration in 26. As of now, after the one-off tariff inflation hit to the economy in 25, inflation is likely to slow in 26. Nancy joins us now for more. Nancy, good morning.
Good morning.
Are you suggesting they just wait then?
I would prefer the Fed be more ease very, very slowly, because, again, what you don't want to do is repeat what we did in 2021, which was eased in a temporary shock and then create way too much liquidity, and inflation indeed comes back. I didn't like the fact he used the word transitory again.
Not many people did.
Nervous. Yeah.
JP Morgan Asset Management, Bob Michael, on the programme with us on Sunday evening as we waited for equity futures to open on the S&P 500. He said maybe this Fed couldn't wait until the next meeting. The next meeting's the first week of May. Can they wait that long?
Oh, I would say, again, this is not an interest rate problem. In fact, the lagged effects of a Fed easing cycle are still going to help the economy once uncertainty can come down and these price shocks can fade. So the Fed has already eased. Let's not forget that. And as we move into the back half of the year, they could actually already help to support growth. So, yes, later rather than sooner would be healthier for the long-run inflation outlook.
What's the historic analog to now where we can get some sense of how inflation has behaved with tariffs at a time where potentially you could also see some sort of demand shock?
So you can go back to 2018 where you had two industries in particular that had big tariffs on them, both washing machines and furniture, and you saw an increase in price immediately, and then you had a decline in unit sales immediately, and then over the next year you started to see prices actually decline because of that weakness and also the substitution effect. So again, it would be best for the Fed to be patient as we go through this price shock, see a dip in the economy, maybe 1% GDP growth as we move into the second and into the third quarter, and then by the back half, fourth quarter into 2026, you can see an incremental improvement in the economy. And the Fed doesn't have to do much to get that.
Some people would argue, including the likes of big Wall Street firms, and a number of Wall Street firms have predicted a base case now of recession, including JP Morgan. Why should the Fed look through that, given what the surveys are showing and given the fact that companies may come out and give some guidance other than Levi's, but may give some guidance to that effect?
Well, they may not look through it. They may incrementally ease. But again, the Fed has already eased. Our models were actually pretty optimistic for 2025, seeing a healing in the economy as we move through the year because of the easing cycle that we saw last year, lower bond yields that we have started to see. Now, oil prices are down. There are basic supports for the economy. This is a one-time price shock, and to ease too aggressively, again, risks creating this inflation next year.
Let's talk about those risks of it not being a one-time price shock.
Yep.
What are the sources of inflation that would concern you going forward from here?
Well, wage inflation actually has been very sticky over the past year. Even average hourly earnings have basically stopped slowing, even prior to the current environment, which told us that inflation was again sticky in 2024. And I think the Fed should heed that. And you've also seen it in some of the price measures, again, here in the first part of the year, where you've seen the ISM price measures increase pretty much across the board within the regional Fed measures.
Neil Duss has made a similar point from Renmac about the risk of second-round effects. He talks about the anxiety of the consumers right now, and you see it in the reports and the surveys. They're anxious about higher unemployment in the future, and if that's the case, the idea that they're going to go around and bid up their wages anytime soon is difficult to get your head around.
Which is the reason why a lot of people aren't looking to that kind of inflation. Are you arguing that potentially a Fed rate cut of even 50 basis points could engineer that confidence at a time where the shock isn't coming from elsewhere?
No, I don't think a Fed rate cut. I think the next major issue for the markets are going to be, one, what inflation does in say, April and May. You're going to get a price shock, a big price increase from the tariffs that are being put in place. We think CPI could accelerate to around a 5% quarter-to-quarter annualized run rate, and that's going to take consumer spending down, and we're watching our daily consumer confidence survey. So, no, we think the Fed can ease. They just can't ease aggressively, and they've already been in an easing cycle. They've pulled back on QT, and so let's not get carried away because there are longer-term supports for the economy as we come out of this, and which we hopefully is by the fourth quarter of this year.
A couple of weeks ago, people were talking about the sequencing of the policies coming out of this administration. That the difficult stuff came first, the tariffs, some of the negative growth shocks, and then the pro-growth shocks come later on with respect to tax cuts and deregulation and other aspects. How much are people overlooking that as a potential catalyst for some growth and, frankly, potentially even inflation, and discounting how much of an upward stimulus that could be on the economy?
Oh, I think that is a very, very significant point. I started in the summer of 1981, and it was chaos in the summer of 1981. Volcker wasn't sure if he was going to be successful. Reagan did similarly. He was going to take some pain near term, allowing Volcker to do what he wanted to do. He fired people. I'm not comparing Reagan to Trump, but I'm just suggesting it's not unusual for an administration to do that. And the longer-term positives are positives. To have onshoring, which I've been focused on for 15 years, is an incredible positive. There are people who want to work in factories. clarity on the tax reform, deregulation, a smaller government. So there are some longer-term positives if we can potentially negotiate some with these tariffs. I'm also for free trade. I'm also for fair trade. And if we come out of this current turmoil with some fair trade, then yes, you can add that to the list of positives for 2020, 2025.
Nancy, I share that sentiment almost entirely. I'm pleased you said it. I think this has been a problem for a long, long time. It goes back decades. I think this administration, led by this president, has done a tremendous job of articulating that problem. The president's done it going all the way back to the 1980s. This is about whether this is the right policy executed in the right way to try and remedy this situation, Lisa. And I think they're two separate conversations. I think you've got to be able to acknowledge the former and then have a debate about the latter. And that's the struggle that a lot of people are seeming to have at the moment over the past week or so.
I'm so glad that you framed it that way, because I think a lot of people do agree that there are some issues, some problems that are very correctly identified by the administration. It's execution risk. It's this question of the uncertainty itself that does have a prolonged period of time, and how it is a key feature in the way that maybe these deals might be being negotiated or not, or maybe this is just simply policy, John.
Nancy, it's good to see you.
You too.
Thanks for dropping by. Thank you. Nancy Lazar there of Piper Sandler. Equities at the moment on the S&P 500 higher by 2.4%, all trying to work out this three-way game of chicken. Nouri Arabini said it's Xi, it's Powell, it's Trump. This is what Martin Norton of Empower's got to say. The Trump put may prove the only game in town when it comes to pulling the market out of its current spiral, but whether that exists is in question. Marta joins us now for more. Marta, welcome to the program. Let's talk about that Trump put. Does it exist?
You know, I think that's what we're all wrestling with. And I think the reality is that it's very hard to put a probability on whether the Trump put actually exists. It's hard to know whether we're going to see serious negotiations around these tariffs. Our concern heading into Liberation Day was that the market wasn't really pricing in the worst case around what tariffs could be. And as we look forward, now there's a bit more pricing in of the range of outcomes, but still that worst case remains elusive, especially if the Trump put remains elusive.
And Marta, as you know, we're swinging from is it a negotiation to are these the rules of the game from day to day. I'm interested from your perspective, how much damage we do in between as we try and figure this out over the coming weeks and months?
Well, I think in the very near term, a lot of the damage is happening and not necessarily likely to get more destructive, in the sense that we're already in a very heightened, uncertain period. Of course, if we see these retaliatory tariffs from China and the U.S. back to China, of course, that raises the stakes a bit. But I think the question is more on the longer-term outlook for where earnings land here. I think the markets can sustain a period of volatility, but if we see this tariff fight drag on into the next quarter, I think we're looking at an environment where we can see a lot of the earnings growth that people expected for 2025 come out altogether.
When you take a step back, there's a question right now about reordering the structure of global trade. These are pretty lofty goals at a time when people have counted on a classic 60-40 portfolio for a long time, where bonds for the ballast and stocks or the growth aspect. Do people have to rethink their longer-term allocations, given that there are some pretty massive changes that may be underway?
You know, it's a really important question. And what I come back to in this environment, this is very different than 2022. When we were in 2022, we could say diversification was of no value whatsoever, especially from the stock bond perspective. But as we sit today, I know we're not getting the kind of oomph out of long-term bonds that we'd like to see, but we are seeing bonds hold up in a way that they didn't in 2022. We're also getting that value from a sector diversification. Consumer staples behaving, for example, very differently than what we're seeing from technology, and we're getting diversification geographically as well, you know, in terms of how we're seeing other markets respond to this environment. So I think we can argue in some ways that the 60-40 or the diversified approach is being reinforced in a way in today's environment that it hasn't been in, you know, in recent years.
Yesterday, someone made the argument that actually indexes are going to have less import right now than they have over the past decade or so, simply because specific companies are going to handle each of the potential regime changes differently. Apple is a perfect example, how they're in the crosshairs versus, say, a Microsoft that might be not as exposed. How do you counter that, the idea that the indexing era might be really entering a new territory?
Well, that's a very powerful point, and I would argue that the idiosyncratic, conversation that you're raising in terms of how these different companies behave in this tariff era is something to watch. I would also argue that it's the market cap weighted effect that set us up for the kind of destructive price action that we've seen so far in 2025, excuse me. The technology, accounting for a third of the S&P 500, the Mag 7 accounting for a third of the S&P 500. People were concentrated in a way that they didn't really even plan to be on an active basis just by passively tracking the market. And so I think we're seeing the risk of that unfold in today's environment. And I think that's one of the reasons that you would call for maybe looking to some of these other ways to index the market. Equal weighted is an extreme response to that. But there are different ways that you can add index-like exposure without having that market cap weighted exposure dominating your portfolios.
Marta, appreciate your take. Thanks for joining us. Marta Norton there of Empower. This could change how people invest. This is the system change that we're trying to get our teeth into over the past week as we focus for good reason on what might happen to the cycle. There's going to be something much bigger than that in a decade to come, potentially off the back of these changes.
I love the point that you made, raising Stephen Myron's point that he raised yesterday, that essentially they're looking to restructure things, that the strength of the dollar was actually a bug, not necessarily a feature of the trade deficit and some of the structural issues, that might change. And if that changes, how does that shift the way people think about asset allocation? Also, we have a whole lot more debt, and how do we have to think about how our response is if there is some sort of recession in the near term? Look, my head's spinning, which is you can hear. And it's hard to kind of wrap your head around, so sometimes it's good just to say, well, maybe things will just stay the same.
America has had the privilege of behaving recklessly with its debt for a long, long time. I wouldn't take that privilege for granted. Yes, it comes with a structural bid for the US dollar, which is something that Stephen Myron has complained about. I understand that. But that's a delicate balance between those two things. You try and address one, you might upset the other. And I'm not sure that's something you want to do as you look to extend tax cuts in the not-too-distant future.
If you are the major trade partner of the world, then people need dollars to transact trade. That means that they want to invest in dollars to offset anything that happens to them. If there isn't that incentive, how do you have the privilege to act recklessly in the same kind of way with a deficit that's the highest level per GDP in history?
It's a delicate balance, that's for sure. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Billionaire Ken Griffin says President Trump's latest tariffs are a huge policy mistake and a tax on families that will increase costs for everyday items. Griffin, who is a Republican megadonor, urged people to reach out to Trump to get him to reconsider his tariff policy. Elsewhere, New York City's congestion pricing program is likely to remain in place for the next several months. The MTA and the Trump administration have agreed to a timeline that would keep congestion pricing tolls on through late October as both parties await a ruling, that all according to a court document. And in sports, the Florida Gators are the 2025 NCAA men's tournament champions after beating Houston in a thrilling championship game. The Gators came back from a 12-point second-half deficit, taking the lead in the game's final minute after trailing for most of the game. It is Florida's third ever title and its first since 2007. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the day ahead from New York City. You're watching Bloomberg TV.
What makes it India's time?
It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining.
ओके गाइस, फिलहाल के लिए नेचुरल गैस थोड़ा और पुल बैक देगा नहीं लगता है, एंट्री बनेगी नहीं इसमें। लेट्स सी, जो लोग बाइंग में है बने रहो, अगर लिया है तो। नहीं लिया है तो फिर अभी एंट्री नेचुरल गैस में है नहीं। नया ट्रेड कुछ बनता है तो फिर देखते हैं, ठीक है। आगे 7 PM पे देखते हैं यूएस मार्केट की ओपनिंग के बाद कुछ नया ट्रेड बनता है यहाँ पर। वैसे अगर इसको देखें तो
and tariffs alone are insufficient, that this needs to be much bigger, much broader than just that?
Which goes to the question that you were asking, is this eliminating the trade deficit or is this something else? Are these just eliminating, say, for Europe, the VAT tax and this question around non-tariff taxes or barriers to entry that might be different and non-comparative in the same kind of way? This week, I think the most important point will actually be Delta earnings. More than the banks, more than any of the economic data, which everyone will just simply ignore. But if Delta comes out and says people are canceling their vacations and businesses aren't spending, that indicates that actually this uncertainty and this paralysis is going to shift into something that starts to take hold. We hope it doesn't. Levi's, if they are the example...
I'll just come out and say nothing's going to change.
If they come out,
Levi's.
Okay, if they come out and they say nothing's going to change and we haven't seen a shift in demand and we've actually seen it revive since February, imagine how big that rally will be right now in markets.
Just got a great message. I always say this too, that we have the smartest audience on the planet, the most dialed in, most sophisticated, and I just got a message from a viewer about what they're calling the mismatch of maturities, the maturity mismatch between addressing trade versus execution. So policy has this set deadline, which is days, literally overnight tariff implementation. And then you've got the dynamic that takes years to take effect, which is onshoring of manufacturing. The mismatch between the two is the difference between the pain you need to take now for maybe the success down the road, and the destination is still not secure either.
It's a wonderful way of framing it to highlight how a lot of people do think that there are some changes that need to occur with trade and changes that need to occur with supply chains and manufacturing. The time that it takes, though, to do that is much longer than a lot of these companies are dealing with when it comes to facing off with some of these tariffs. Again, execution risk. That is what a lot of people are trying to understand.
We keep going back to the same question, and you said to me yesterday we'll be asking that question for weeks, and I imagine tomorrow morning we'll be asking the same question. Are these the rules of the game, or can you negotiate them? Andrew Sheets of Morgan Stanley will help us answer that question alongside Chris Harvey of Wells Fargo, Richard Bernstein of Bernstein Advisors, and Ryan Peterson of Flexport. That conversation timely.
How much are people just leaving ships in the middle of the ocean with goods on them, not wanting to bring them in because they're not sure what they're going to have to pay for them and whether they can pass those costs along to the consumer?
Equity futures session highs were higher by 2.4% on the S&P 500. From New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
NVIDIA and Jensen interact with quantum computing companies.
Don't miss Bloomberg Technology live every weekday.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels.
गैस के ट्रेड को थोड़ा ट्रेल कर लेना गाइस, ठीक है, नेचुरल गैस में, क्योंकि 7 PM भी होने वाला है। आधे घंटे में जितना आ जाता है उतना बेटर। अगर आधे घंटे में ज़्यादा मूवमेंट नहीं हुआ तो फिर एसएल कॉस्ट टू कॉस्ट रख लेना बिफोर यूएस मार्केट ओपनिंग। रिमेंबर दिस नेचुरल गैस ट्रेड, ओके। क्रूड ऑयल में भी और कोई ट्रेड बना नहीं है, तो क्रूड ऑयल में कोई ट्रेड लगाया नहीं है। ये दूसरी बार है इस रेजिस्टेंस पे, एक बार ऑलरेडी आ चुका है, दिस इज सेकेंड टाइम। देखते हैं कितना बड़ा फॉल करता है। अगर ज़्यादा बड़ा फॉल नहीं किया तो फिर वो रेजिस्टेंस भी वीक हो जाएगा। सेवन PM तक आता है तो मोमेंटम। लोग बाइंग में हैं, अगर वो चाहें तो प्रॉफिट भी बुक कर सकते हैं। होल्ड करना है तो फिर ट्रेलिंग ऐसे लगा लेना भाई, क्योंकि बाइंग ऑलरेडी लोअर एंड से आ चुकी है प्राइस में।
Bloomberg's Tyler Kendall there reporting live from the White House. Now, Goldman Sachs is preparing for a cyclical bear market despite the negotiations and tariffs. In a note out today, strategists say the event-driven bear market from tariffs could, quote, easily morph into a cyclical bear market given growing recession risks. Goldman Sachs chief global equity strategist Peter Oppenheimer joined Bloomberg this morning.
Our economists believe that the probability of a recession in the US, for example, over the next 12 months is now around 45%. But indeed, if the full expected tariffs come through and there is no pullback, that would likely trigger a recession. And look, in a recession, typically profits do fall anywhere from sort of 10 to 20% or more, depending on what industries they're in and in what region.
And that, of course, is just one of several warnings coming from Wall Street in the past 48 hours. Let's discuss at the desk with Bloomberg's Bailey Lipschultz. And Bailey, I want to focus specifically on the Goldman call. So the idea there is that what we're seeing right now, it could turn into a longer-lasting cyclical bear market. That seems different and much worse than the event-driven bear market that they think we're in right now.
No, exactly, Katie. And that's kind of that prolonged downside. And when we talk to investors, the big uncertainty for them is what happens next. Obviously, as you can see, futures are up 2.5% right now, but that still doesn't signal, is this a near-term bounce? Is this the start of something that is longer lasting and ends up bringing major averages further down, double digits further down? Because when I talk to investors, if the tariffs are rolled back, we're going to rip. But if we continue to see the Trump administration not back down and lean into these tariffs, then that could kickstart another 10 to 20% downside. And that's really kind of the fundamental thesis. Again, if Goldman economists are right now raising the probability of a U.S. recession to 45%, so that's becoming very quickly discussed. And even Larry Fink, I think yesterday, said most CEOs he talks to think we're already there.
He said the economy is weakening as we speak. He said that yesterday. That felt pretty dramatic.
That we're already in a recession. Yeah, that was.
Yeah, most CEOs, and then you also see that, frankly, during the small business optimism, you see that optimism fading for a lot of players. I also want to point out this note from Barclays this morning because interesting, they say that a lot of the deleveraging you've seen in the hedge fund industry, particularly with systematic funds, might have been washed out. But retail funds, where you excel here, I am shocked at how closely you can keep an eye on those retail traders. It seems like there's a long way to go still.
Yeah, they're not capitulating, and they're not really worried because when you talk to retail traders, for the most part, the thought is every time prices move lower, it's an opportunity for it to be cheaper for the long run. But when we talk to some folks who manage IRAs, they are seeing some panic from older people who are closer to retirement. If you're in your 60s, maybe you do actually want to get and scale back your exposure to equities, because the big thing is you've been rewarded with back-to-back years of huge returns for the S&P 500, but at some point you have to pay for that volatility.
Matt, they have a word for that. It's cut your losses.
Cut your losses, something you got to learn to do. Bailey, thanks so much for joining us. Bailey Lipschultz from Bloomberg News. Now, even the biggest bulls on Wall Street are tempering expectations. Over the weekend, Oppenheimer's John Stoltzfus lowered his year-end S&P 500 price target by 1,100 points from 7,100 to just under 6,000. John joins us now. Great to have you on the program, John. I wonder, first off, if you think that we hit a bottom yesterday and now that this bounce is sustainable.
Matt, thanks for having me on the show. Always great to be on Bloomberg TV with you. I don't think yesterday is, I think what it was, we had two things happen yesterday. There was the false news, that came out that there was going to be a pivot from the administration, and the market soared. And then later on during the day, with the news about negotiations with Japan, that kind of eased things. I think that, this is the beginning of the recovery process from this. Everybody was in shock by the degree of the tariffs. I think everybody had expected tariffs, but it was like a big difference from tariffs 101 in the administration's previous run in the White House, and now essentially tariffs 401, senior year, It's got to think here. The market's looking for cooler heads to prevail on this. I think there's opportunity, and those cooler heads have got to be from both sides, because the reciprocal action, for instance, from China doesn't help anything, because then you'll go back and forth like pickleball volley, wild stuff happening, and a lot of attention to it, but that's a lot of egos. The reality is this does present serious problems for businesses and communities and the as well as the consumer. But at the same time, you have to say one thing about this administration. It is actually addressing problems that have been kicked down the road for over 40, 30, 20, and 10 years as the world really moved to those who export to this country and those of us buying the stuff that they sell, and our loss of significant amounts of manufacturing that's key, whether it's in healthcare or whether it's in technology, that are really related to national security.
So, John, I think a lot of investors and analysts would agree with you that the intention is there, maybe quibbling with the execution of sort of reversing some of those dynamics. But I actually want to go back to what happened yesterday. As you phrased it, fake news. We got those headlines while we were on air on this show. I'll just say that X account, Walter Bloomberg, not actually affiliated with Bloomberg. But I feel like there might be a teachable moment there, because the reaction was so violent to the upside. I feel like it really exposed the risk of being too underweight if and when we do get some relief in the form of headlines on tariffs.
Oh, Katie, it most certainly showed where the markets want to go. And the markets are looking at the view is, its goal is beyond this. And related to when people ask us, well, what would you be putting on your shopping lists right now? We've got to say it looks like technology, communication services, industrials, consumer discretionary, and financials, what we've liked for a long time here, because these have been among the most brutalized sectors in this thing. The overselling looks to us like at different points the negative pitch book that we'd seen in 2022, which predicted all kinds of things that never happened. The only thing that did happen is the market was driven into a bear market. That was looking like a winning volley there for a bit here. But I think yesterday what happened really points to the fact that if all of this is going to go to the ultimate negative, projected into infinity negative outcome, it's too awful to consider. You've got to figure, cooler heads will prevail. I mean, I'm so old. I was a kid, a little kid, but a kid who was interested in global politics when the Cuban Missile Crisis occurred. It looked really serious when Khrushchev was in Cuba, and Kennedy and both Jack and Robert were fighting them, but that worked out.
John, while we all wait for cooler heads to prevail, I want to point out where the VIX is right now, because even though you're watching futures rip this morning, really take a breather, you are still watching the VIX above a 40 handle or near a 40 handle. It is lower than we've seen the last couple of days, but this is still an extremely volatile market. How do you play that? Doesn't that mean that you can stand seeing your face ripped off in this market if you get in too soon?
Well, that's, it's funny. It's a real good question, Sonali. When we get asked that a lot, people say, do I back the truck up into this? Do I consider this being perhaps one of the best buying periods that we've seen in a while since COVID or since the great financial crisis? And we say, we wouldn't do that right now. We wouldn't be selling into this. We think very early it was too late to start getting defensive. But it certainly was a good opportunity not to look to buy the dips as much as buy the babies that get tossed out with the bathwater, that are those stocks that are likely to carry us higher going forward. But we think we're getting to a point where people, can feel more comfortable. Managers with more conservative mandates will actually be able to consider dollar cost averaging in this place and recognize the fact that we're not going back to the slide rule or the abacus or abacus, however one wants to pronounce it. Essentially, we're dealing with globalization becoming revitalized, diversified away from one country centricity.
Right.
The U.S. getting some of its manufacturing back. And in the process of that, probably a healthier economy than we've had in decades.
All right, John, you're sticking with us. We'll come back to you in a moment. That is John Stoltzfus. I do want to mention some breaking news in the form of a Truth Social post from the president. He says that he had a great call with the acting president of South Korea on the topic of China. Trump says that China wants to make a deal badly and that we are waiting for China's call. We'll bring you the details as we get them. But coming up, Apple set to snap a historic sell-off. We'll take a closer look at the stock next. This is Open Interest.
The names that move markets are on Bloomberg.
U.S. consumers are flexible. We have options. We can produce stuff at home. We have a variety of countries we can import stuff. We can substitute into home production. Whereas countries that sell to the United States are inflexible. They've only got the United States to sell to. There's no alternative. So they're the ones who will bear the burden of these tariffs, which means that there's going to be very limited pass-through into downside economic risk or into higher prices. So I think that a lot of folks have got that wrong.
Nobody covers business like Bloomberg. Context changes everything.
In case you missed it on the opening trade.
The president is speaking to this part of our population that we know did not benefit from globalization. You know, the IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking. And this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe the past losers will be the winners, and maybe the past winners will be the losers.
Don't miss the opening trade, live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It would take years to even make that more than 5%, just given the logistics and the nature of India, you know, in terms of as Apple tries to move some stuff there. Look, no company in the world is hurt more from once that came out of Trump's mouth in terms of Taiwan and China tariffs than Apple.
And that was Wedbush analyst Dan Ives speaking to Bloomberg yesterday about Apple. And shares are up pre-market again after the iPhone maker plunged 19% over the past 3 trading days. Apple seeing a wave of panic buying for iPhones as higher prices loom due to Trump's tariffs. Let's discuss with Bloomberg Technology co-host Caroline Hyde. So you are seeing a little bit of relief in the shares right now. But if this is just a pull forward of demand, I mean, how sustainable is that?
And will we not actually see it until its fiscal third quarter earnings? We've got May the 1st is the first set of earnings. We're going to get any sort of testament to what demand has been like of late. And KeyBank, another analyst, has just come out with a price target downgrade because they think there has been soft consumer demand even prior to the tariffs. And then you've got the likes of Dan Ives who are putting out comments like, if you bring it back to the United States and manufacture an iPhone here, it'll cost you $3,500. No one expects them to do that. But even by bringing more iPhones from India, for example, JP Morgan's saying, look, you're going to have to increase the price of your $999 Pro phone by at least $120. You're going to have to see the Pro Max go up by about $350. No wonder every store around America and the world right now feels like it's vacation time, like it's going into the holidays. Every person you speak to in an iPhone store serving customers says they're coming in, they're worried about prices, and they're looking to upgrade right here, right now.
Caroline, we thank you so much for joining us. Of course, this Apple story is one that we're going to be watching very, very closely. It's one of the giants in the room when we think about those trade talks. And we are back now with Oppenheimer Chief Investment Strategist John Stoltzfus. And I want to point out what's been going on this morning, because you are seeing futures edge higher after that brutal three-day streak in the market. But part of this is because of what is coming out of the White House. For example, Trump speaking about the potential for a trade deal with South Korea, optimism around the situation with Japan. There has been so much negativity around these trade talks. Is there a scenario, John, that you see in which the U.S. does win out?
Well, Sonali, I'd have to say that when you look at the picture here, there is an awful lot of overcapacity in manufacturing around the world that needs to replace the U.S. buying power as the largest consumer nation in the world. If they want to just turn their backs on the U.S. and we wind up, essentially in some kind of a standoff here. The reality is, I think, just as President Trump's constituencies are expressing their concern, making interviews to the press. We've already seen many of his supporters who wrote big checks last year saying that they're displeased with this. You can figure the same thing is happening to leaders around the world when it comes to addressing this, because it has to do with employment, economic growth on both sides of the fences. One of the things that we thought was ironic for quite a few months here was that the foreign markets, particularly the European markets, were outperforming the U.S. beyond valuation underperformance for almost a decade. And I've been a global investor for, almost the whole 42 years I've been in this business. So I like being diversified across the globe, but I'm underweight international. We couldn't help but think, people think that it's only the U.S. could suffer from a trade war. My gosh, everybody else, if you look just China needs the U.S. to a large extent. But their domestic economy is not large enough to absorb our buying power disappearing. And the same thing goes for Europe and elsewhere around the world. I thought it was curious that the greatest leniency that the administration showed in the tariffs really was overall with Latin America, which was interesting. In other words, bring the business back to home. We know that Mexico, of course, has regained its status as the largest exporter into the U.S., taking a lot of business away from China over the course of the Biden administration, the prior Trump administration, and let's see what happens now.
John, great to get some time with you. Thanks so much for joining us. John Stoltzfus there from Oppenheimer, who's cut his target from 7,100 to about 6,000, but reserved the right to raise it again if things take off to the upside. Less than 10 minutes to go until the opening bell. We'll start the trading day with Matt Miskin, Manulife, John Hancock. This is Open Interest.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
In case you missed it, on the Pulse.
You know, it's not the headline-grabbing $15 billion bankruptcy. It's not Lehman Brothers. It's not that. But what is happening underneath the surface is just frantic activity. There's a moment in time when real estate gets really interesting.
Now or soon?
Now. It's here.
Don't miss the Pulse, live every weekday.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Well, futures are surging right now after Treasury Secretary Scott Bessent told CNBC this morning if we're successful, tariffs would be a melting ice cube. Let's discuss with Matt Miskin. He is co-chief investment strategist over at Manulife John Hancock. Matt, great to see you in person. So the thing about ice cubes is they get smaller as they melt. So you could make the case that maybe this is a negotiation tactic. That seems to be what traders are doing right now. Do you think that this bounce, though, is sustainable?
Well, the rates rule everything around me line that last time we talked about, Kareem, actually still holds. And what I struggle with the bounce is that the 10-year yield is popping higher. Yeah. And so not only is the 401ks across the country failing lower balances, but now mortgage rates are going up. And that isn't healthy. We need actually a softer Fed tone and one where the 10-year yield...
Softer? You want an even softer Fed tone than we got from Jay Powell on Friday?
Pillow soft.
I think actually he was...
That guy was milquetoast.
He was hawkish, I thought. I mean, he didn't even express any concern about the volatility. All right, so there's a dog and a tail. The dog here is the nearly $150 trillion of consumer net worth across the country between real estate and markets. That is what actually drives economic activity. The economy, GDP, is like $27 trillion. That's the tail. So if stocks continue to do what they're doing, and they're their own worst enemy right now, because the volatility is going to make people more concerned about investing. You think about institutionals, risk-adjusted returns, but the wealth effect coming down in that consumer net worth is going to lead to weaker economic activity. And if Powell continues to be hawkish and just holding, I get it. Four cuts are in the market right now. That's a lot. But
at the same time as Bill Dudley says, we should expect 5% inflation. Right. Put a pin in that. We're going to hold you over to the next block. And also, if we mention yields again, Shanali's going to bring up the basis point trade. So don't.
The basis trade. I wasn't going to do it. So thank you for that.
So don't encourage her. Matt Miskin is going to stay with us. Ahead of the opening bell, let's get a quick check on futures. We're in the green to the tune of 3 1/3%. This is Bloomberg.
is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving,
Hey guys, US market open होने वाला है, ध्यान रखना. US market is going to open in 2 minutes. नेचुरल गैस में जैसा मैंने बताया था रेजिस्टेंस है, सेलिंग बनी हुई है वहां से, बट नेक्स्ट कैंडल देख लेना. एसएल चाहो तो कॉस्ट के अराउंड भी रख सकते हो. नेक्स्ट कैंडल ओपन इक्वल टू लो नहीं बननी चाहिए, बिकॉज ओपन इक्वल टू लो बनी तो प्राइस फिर उड़ जाएगा ऊपर की ओर. नैस्डैक के डाउ में ट्रेड करने के लिए कौन सा अकाउंट लगेगा? धन में कर लो. धन में इंडियन मार्केट कर सकते हो, फॉरेक्स अकाउंट में करना पड़ेगा और कोई ऑप्शन नहीं है. अगर बाहर किसी फॉरेन कंट्री में रहते हो तो वहाँ बहुत सारे फॉरेक्स ब्रोकर मिल जाएंगे आपको. बता दिया हैरी जी, मैंने बता दिया था, फिर से रिपीट करना है क्या? नैस्डैक को रिपीट करना है, नैस्डैक को बताओ. नैस्डैक को रिपीट करना है आपको. वैसे मैंने बता दिया था, फिर भी लेट मी नो. ओके, 1 मिनट भी नहीं रह गया अब. नैस्डैक देखोगे कल मार्केट गैप डाउन ओपन हुआ था 7 को. कल वॉलेटिलिटी थी, थोड़ा बहुत साइडवे चला गया था, आज रिकवरी करी है, अच्छा है. एक बार देख लेते हैं ऊपर कहाँ प्लान कर सकते हो. अगर आपको ट्रेड करना है या ऑलरेडी किसी ट्रेड में हो तो बता दो, उसको उसी का देख लेता हूँ मैं. यूएस मार्केट ओपन गाइस, यूएस मार्केट फाइनली ओपन. नैस्डैक देखना है फिर से क्या? देखो नैस्डैक में अगर फिलहाल देखें कोई नया ट्रेड 15 मिनट टाइम फ्रेम पे, वही सेम ही ब्रोकर है, ठीक है. आईजी ब्रोकर का ही चार्ट देख रहा हूँ मैं. ओके, यहाँ पर कुछ है क्या? हाँ, वॉलेटिलिटी रहेगी करंट कैंडल पे, बिकॉज यूएस मार्केट की ओपनिंग है तो वॉलेटाइल रहता है ये मार्केट. कैंडल हमेशा वॉलेटाइल होती है. इसका नैस्डैक में कुछ है क्या? मार्केट भी ना 7 को इतना गिरा है, उसके पीछे कुछ प्राइस एक्शन ही नहीं दिख रहा है इसमें 15 मिनट में. तो फिलहाल मेरे साइड से उसमें कोई लेवल नहीं है, लेवल ही शो नहीं कर रहा है. 15 मिनट चार्ट में देखोगे ना, जिस लेवल पे प्राइस अभी है उतना पीछे देख नहीं सकते. या तो टाइम फ्रेम इंक्रीज करके 1 आवर टाइम फ्रेम बता सकता हूँ, या फिर अभी वेट करना पड़ जाएगा. इस लेवल पे लेवल नहीं है, पीछे जरूर होंगे बट शो नहीं कर रहे हैं चार्ट पे. उतना पीछे चार्ट जा नहीं रहा है कैंडल्स का, तो मेरे अकॉर्डिंग अभी कुछ नहीं चल रहा उसमें. करंट लेवल पे हो सकता है रेजिस्टेंस रहा हो पीछे. एंड बाकी वैसे सेल करना है तो ऊपर एक लेवल कंसिडर कर सकते हो, 18,530 520 के बीच में. ठीक है, 18,520 से 530 के अराउंड अगर चाहो तो वहाँ सेल कर सकते हो. यहाँ पर भी होगा शायद रेजिस्टेंस 18,200 के अराउंड, बट मुझे शो नहीं कर रहा है तो मैं लगा नहीं सकता उसको. ऊपर ही है फिर 18,530 टू 520 के बीच में एक 15 मिनट का रेजिस्टेंस. आईजी ब्रोकर की बात कर रहा हूँ. बाकी सपोर्ट अगर देखोगे तो सपोर्ट है ही नहीं बिल्कुल भी. सपोर्ट के लिए भी वेट करना पड़ेगा। रेजिस्टेंस बता दिया मैंने कहाँ पर है। बाकी अभी यहाँ पर नियर बाय में कोई सपोर्ट अभी बना नहीं है, कोई नया बन जाए तो बेटर रहेगा मेरे अकॉर्डिंग। चांसेस हैं एक 17,550 के अराउंड या फिर 17,500 के अराउंड एक सपोर्ट बन जाए। अभी बना नहीं है तो वेट, ये दो लेवल हैं ऊपर, बाकी अभी और कोई नहीं है। हाँ क्रूड ऑयल में भी ऊपर आता है तो यहाँ एक सेलिंग का प्लान यहाँ रहेगा, या फिर ये नीचे आता है तो ये बाइंग का प्लान यहाँ पर भी है। यहाँ पर भी था बट वो लेवल निकल गया, बीच में बाई करेंगे तो एसएल बहुत बड़ा हो जाएगा। बाकी कैंडल का जरूर ध्यान रखना, ओपन इक्वल टू लो पे बाई नहीं, ओपन इक्वल टू हाई पे ओपन इक्वल टू हाई पे बाई नहीं, और ओपन इक्वल टू लो पे सेल नहीं, ठीक है, चाहे सपोर्ट रेजिस्टेंस कितना ही स्ट्रॉन्ग क्यों ना हो। लाइक करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम and subscribe the channel, hit the bell icon and share with your friends and family members. देखते हैं कुछ मोमेंटम आता है तो अब।
With economic slowdowns, you get the multiple contraction, which is sentiment driven, and then you get the earnings revisions. Analysts have not yet woken up to this new potential regime, and they have not revised down the earnings. So it is likely that comes down from high single digits. We think it's going to be low single digits. It might even be flat this year. So that is still coming, but it's all relative. So what earnings are going to hold up the best this year? That's the work you got to do within the equity market. And to us, tech, even though it has sold off, we think is going to hold up better because, again, the margins, the moats, all that good stuff, and then those defensive sectors of what people need versus what they want. And then, you know who doesn't care about earnings? The bond market. Well, the corporate bond market does, but the high-quality stuff, they don't mind if it's weaker growth. And we actually are calling for disinflation this year. We think the biggest miss with basically analyzing these tariffs and everything else going on is the thought that inflation is going to accelerate. We actually think it's going to decelerate over the course of the year. That's going to be beneficial to bonds. Maybe the Fed cuts a little more than expected.
I was just going to say, to underline your expectations, or maybe better put, your hope for the Fed this year, how many cuts do you see, and where does the 10-year end 2025?
So our fair value estimate on the 10-year is about 390, so it's still 30 basis points lower, but that's without a recession. If we're in a recession by the end of the year, we think actually the 10-year could have a 2 handle on it.
Ooh.
And that the Fed's going to be cutting more than the 4 times that's priced in. We think the 4 times is basically just, hey, inflation is slowing. We're going to kind of do this more methodically. But the bond market has not priced in a recession by any means, even though the equity market kind of is. So there's still a lot of bond returns left. The Fed hasn't given you the green light yet on the bond market. They're saying red light, hey, we're not done here yet. We're still concerned with inflation, but that could leave them behind the curve if the wealth effect does diminish here, if the economy does slow more than expected. And that's good. Bonds and stocks are not acting the same. The correlations are dropping, which is great for multi-asset investors like ourselves.
Let's finish on that point, because if we do end up in a scenario where 10-year yields are trading with a 2 handle, what is the equity market doing? Because that sounds like a recession to me.
Yeah, it's still likely lower from here. So if you basically look at drawdowns, if it's a non-recession drawdown, expect kind of mid 20% type drawdown. We're already at, 17? We're most of the way there for non-recession. In recession, it's more like 37%. So we've got more. So for us right now, you're getting a lot of price discounts in a non-recession environment, but it isn't pricing in a recession. We are still leaning into bonds relative to stocks, getting some nice income while we wait, mitigating the volatility, and looking for some equity opportunities here as they sell off.
All right, Matt, it's always great to speak with you. Nice to get a good chunk of time with you this morning. That is Manulife, John Hancock's Matt Miskin. Meanwhile, let's look under the hood because we have plenty of movers on our radar. I want to start with Levi Strauss, up 5%. Shares were up as much as 16% at the open. That would have been its most intraday in a year. That's after they reported earnings and seemingly shrugged off the impact from tariffs. Specifically, they said that tariffs will have a minimal impact on their margins in the current quarter. The CEO also said that the company would raise prices surgically, but you can see, Shanali, some of those gains coming back right now.
I've got another tariff story for you. I'm watching Micron because it's rising after a report that it is imposing a surcharge on some products sold in the U.S. to compensate for Trump's tariffs. You're seeing the stock up almost 5%, not the biggest gainer in the Philadelphia Semiconductor Index, but close to it. And you are seeing others, like Bloomberg Intelligence, react that this could dent demand, but clearly this tariff reaction, the early tariff reaction, correction is not hurting the rebound, at least on the onset. Now we're going to get a look at some other stocks on the move this morning. We are going to bring in Bloomberg's Sunita Sekova for that.
Yeah, we've been talking about deep buying. We've been talking about deals. Goldman Sachs just upgraded Eli Lilly. They saw a compelling entry point. The stock is up about 4% at the open. Of course, it had a very rough day on Monday. The stock fell after the Trump administration spiked a plan to pay for obesity drugs for Medicare patients. We're seeing a lot of optimism for the stock more broadly. We have 29 buy ratings according to Bloomberg. The stock dropped 13% over the big sell-off in the last 3 days, but clearly the buyers are stepping in. There are some good news and upgrades from Goldman Sachs. One interesting stat is they see the value tripling from 28 to 95 billion by 2030. So a lot of optimism for Eli Lilly from Goldman for sure.
All right, thanks very much for joining us, Sunita Sekova there. Coming up, Stellantis offers to help its suppliers shoulder tariff costs. We'll look at autos next because there's a lot more than that going on. This is Open Interest.
In case you missed it on Balance of Power.
The statute governing the FTC says commissioners can only be removed for cause. Was there any indication that you were fired for cause?
No, there was no claim of cause, and the statute actually specifically says cause means neglect, malfeasance, or inefficiency, and there was no claim of any of those.
So as we talk about some of those other examples, keeping in mind we are having this discussion with you on the day we got a Fed rate decision, is this directly applicable to what is supposed to be an independent central bank? Is that one way in which market participants should be looking at this?
Yes, that's exactly right, and market participants should be scared. To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump, and if the president can illegally remove me, he can legally remove Jerome Powell. People should be very worried about that.
Don't miss Balance of Power live every weekday.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to Open Interest. A quick check on stocks. You have green across the board. Not quite session highs, but pretty close. NVIDIA shares up nearly 6% right now. That's why you see the NASDAQ 100 out in charge. We'll keep an eye on that, but it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Morgan Stanley is upgrading Charles Schwab in its hunt for more defensive exposures. The firm is also upgrading CME and cutting Robinhood. Next up, education technology company Chegg getting downgraded to a sell over at JP Morgan. The firm says that economic weakness will drive students to prioritize making money at secondary jobs ahead of education, which is pretty grim. And finally, GM getting downgraded to a sell over at Bernstein because of the tariff impact. The analyst says that the outlook for GM is, quote, clearly unfavorable. Matt Miller.
Well, let's stay on cars. The maker of Jeeps, Stellantis, is offering to help suppliers shoulder the cost of tariffs. The automaker has outlined a program which its suppliers can apply for as the initial shock of levies on autos and the coming duties on parts rock the industry. For more, we're joined by Bloomberg's Detroit bureau chief, David Welch. And David, so much going on with Stellantis. Their production in Italy has absolutely tanked to levels we haven't seen since the 1950s. And it looks like they're shopping Maserati and Alfa Romeo. At least they've tapped a consultant to look at those units. So what do we know?
Well, look, the company's had a lot of problems. Its cash cow is really the U.S. business, and that business has stumbled. The European business, for any company, but especially Stellantis, is pretty tough. The margins have always been pretty poor, and they've got some of they're strongest in some of the weaker markets with their mainstream brands. So it's not a surprise that they want to shop these luxury brands in the same way that Ferrari was IPO'd a long time with. They're not going to get that kind of money like they did with Ferrari, but if they shop some of these brands, they'll get some cash flow, and it'll also help the company focus. I mean, if you look at Stellantis, it has a bigger family of brands right now than pre-bankruptcy General Motors did when GM was trying to manage stuff like Saab and the old Hummer brand and Pontiac and all this other stuff. It's just a huge burden to do design, product development, marketing for this big house that they've got. So if they can get a little bit of cash and narrow their focus, probably a good thing for them if they can make it happen.
David, do they keep Chrysler and Dodge? Because, yes, those are two brands that they own, but they don't really make any products anymore.
Yeah, you do have minivans, which is still a decent business for them. Maybe the sports sedans, but do you need two whole brands to do that? That's really tough to see. I mean, what they could do with some of these vehicles that they need is just kind of like they did with Ram. It used to be the Dodge Ram. Now it's just a Ram. They could still sell it at the same dealerships that sell Jeeps and everything else. And by the way, most of their brands in the U.S. are all under one dealer roof if you go to shop them. So they could have a minivan, and if they wanted to keep one of those rear drive sedans for fleet business and for sports cars, they could just brand it without an overarching brand and then have them sold at the same dealerships who are buying the rest of their line.
David, I've looked at some of the things that have happened since, for example, Porsche spun off. Didn't go that well. I mean, Matt makes a point that it worked for Volkswagen. So you have mixed success in spinning off brands. But in my mind, I guess I'm skeptical because the reason they all came together in the first place was to share the benefits of scale. So are those benefits deeply lost if you see some sort of separating, siphoning, and pushing things away from each other in terms of supply chain?
One of the issues, though, with these sports car brands and some luxury brands is that they don't share enough with the mainstream companies' brands. General Motors makes it work with Cadillac because it's they have two sedans, but it's largely SUVs, and so they're sharing a lot of SUV parts. When you're talking about sports cars, in luxury sedans, it's a different animal than most of the volume that mainstream brands are getting, which is all in small, medium-sized crossover SUVs. So, are they sharing enough to make that work? I don't know if they're getting enough out of the parts bin for them, and maybe a company like Volkswagen actually would be better because they've got a bunch of luxury brands that have a lot of hardware that could be usable by these brands. I'm not saying Volkswagen's interested in this. I'm just saying they're the kind of company that has made sense because they've already got luxury in their line.
All right, David, great to speak with you as always. That is Bloomberg's David Welch. And we also want to take a look at coal stocks right now, moving higher after our Press Secretary Carolyn Leavitt tweeted or posted that today at 3 p.m., President Trump will sign an executive order to reinvigorate, quote, affordable, reliable, and clean coal. Peabody leading the charge right here, up about 10%, was higher by as much as 18% in the minutes after those headlines dropped. Core Natural Resources and Warrior Met Coal also moving higher on the day. Now, coming up, investors are bracing for sour corporate earnings as the impact of tariffs looms over Wall Street. We'll take a look next. This is Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. We're looking at a big rebound. You're going to hear the phrase turnaround Tuesday a lot, like you do every time there's green on the screen Tuesday and Monday was red. But here it's really serious. 3% on the S&P 500, and we were only down, 0.3% yesterday? The NASDAQ 100 up 3% as well, as tech stocks really lead the way. Even small caps are getting some love today, so some people really willing to place some bets. In terms of the individual stocks, Nvidia is huge, a gain of almost 7%, and a $2 trillion stock. That means a lot. Tesla up 3.7%. This is a fascinating story that we're going to dig into because Elon Musk has said he thinks tariffs should be zero, at least between the U.S. and Europe, and that seems to go against really the morals of his best friend in the White House. Apple up almost 3% after a 19% decline in 2 days. We gave you the coal story just a moment ago, and then Walgreens Boots Alliance up only 1%, but after earnings kicking off that season.
Speaking of earnings, Wall Street is bracing as more corporate earnings roll out starting later this week. Now, investors are worried about the impact of tariffs on operating margins and earnings outlooks. Here with more, Phil Donahadrick of Bloomberg News. And you're looking at, for example, BI analysis saying that the EPS growth in this first quarter is looking pretty low. It's looking at rising at the slowest pace since the third quarter of 2023. How are investors reacting to these new expectations?
I think
think the key here is the word uncertainty, obviously, because a lot of companies that are trying to look ahead over the next year, how do they make decisions in this environment? And hence you have analysts cutting down first quarter estimates for what they're expecting for S&P 500 earnings. But we also have a model from Bloomberg Intelligence saying that even with the ratcheting down that we've seen thus far, the estimates suggest that maybe they're a little bit too optimistic at this point and that we could see further downgrades as companies start coming out with.
And we just heard
earnings.
that from Matt Miskin, actually, that analysts are still too optimistic when it comes to what this earnings season holds. And it feels similar to the jobs report in that it's not necessarily about the numbers we get, because they're kind of stale in the context of, okay, the world has changed and theoretically will change when we implement tariffs tomorrow. How do companies even model what's going to happen? Are we expecting to see companies just pull guidance altogether?
That's a really good question, and it's a big possibility, and it really makes me think back to the early COVID months when a lot of companies, they were so uncertain about what the future was going to be holding. They weren't sure about supply chains and consumer confidence and all of these different things that they have to input in terms of looking ahead into the future. And so we have Dan Ives, for example, arguably the best known tech analyst, saying in a note earlier this week that with the current situation, he does not expect tech companies, most tech companies, to be giving any guidance on their first quarter calls. So we'll wait and see what happens. We're going to hear from companies pretty soon, but that's a stark reminder of the environment that everybody's dealing with.
Doesn't help to leave people in dark. Lori Calvasina yesterday was furious that these companies aren't doing more to guide investors. And what we didn't get yesterday, guys, from Jamie Dimon was his weather forecast. We don't actually know how bad he sees things coming.
Yeah, although we have heard, even in the last quarter's calls, we heard some CEOs speaking out against tariffs. You're starting to see a little bit more of that in corporate America. The Restoration Hardware call was hilarious, right?
It's instant classic.
Yes. So do you expect some of these CEOs to really come out hard against tariffs?
Like you said, more are coming out. I think it's notable that somebody like Bill Ackman came out over the weekend saying something like, this could be like a nuclear winter when it comes to the outlook, when it comes to the economy.
That's a weather forecast.
That's a really dire weather forecast. But those are really stark words, and that's somebody who had backed the administration, backed the president all along on a number of different policies. And so just to hear more people coming out and talking about what they're feeling and what they're seeing, what they're expecting,
right,
it's possible we start to see more and more as this drags on.
Well, just in the last minute we have with you, take us into how investors are positioning amid all this uncertainty. When you take a look at ETF flows, for example, I know that there's been a lot of two-way traffic.
So much two-way traffic, yes. It's a little bit difficult to actually look at the overall picture at this point because there is quite substantial dip buying happening with certain products. So, for instance, a levered NASDAQ 100 ETF saw a huge inflow yesterday, which obviously it can look great in the short term when you get a bounce. But overall, I think there is still a bit of a sense of we have to wait and see what further information we get. Obviously, we're getting headlines about different phone calls that the administration is holding with different countries around the world, investors reacting to those types of things, but it's still a bit too early to form an overall picture.
Right. You mentioned that big flow. TQQQ, which is 3 times levered, the NASDAQ 100 took in $1.5 billion yesterday, currently up about 11%, Matt Miller.
All right, we're looking at stocks really jumping up here now, 3.5% the gains on the S&P 500 as we get just about a half hour into the session. Coming up the next hour, Karen Pay of Franklin Templeton joins us. Plus, we get to hear from Snap-on's Nick Pinchuk, as well as Leland Miller of the China Beige Book. This is Open Interest.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
"30 minutes into the trading day, and we have a rally on our hands. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Bassick.
And I'm Katie Greinfeld.
And coming up in the green, stocks rebounding from a 3-day sell-off as countries rush to the tariff negotiating table.
But a fight to the end is what China is pledging to retaliate as President Trump threatens to slap Beijing with an additional 50% import tax.
And fresh off his trip to Asia, we'll hear from Snap-on CEO Nick Pinchuk as Trump's tariff strategy sparks uncertainty and criticism from manufacturers. All that and more coming up, but let's check on these markets. The S&P 500 fresh off its session highs, now up about 3.6% on hefty volume. You take a look at what is actually moving right now. You only have 17 stocks in the red right now. This is a big, broad bounce back from really the carnage that we've seen over the last 3 days or so, Matt Miller. We'll have to see if it can sustain itself.
Yeah, absolutely. And let's talk a little bit about that carnage and the results. Joining us now is Karen Pei, Fiduciary Trust International Head of Portfolio Management and Equities. And Karen, I want to talk first about, you know, I think we were conditioned in the past years to put a much heavier balance of stocks into our portfolios. And they're also a much heavier mix of big tech, big cap tech stocks. So what did that, 10% loss on Thursday and Friday, or 10% plus loss, mean for most people's portfolios?
Well, certainly portfolios are down on a year-to-date basis and have retraced a lot of the gains actually from last year. In fact, the market, as you know, has retraced the gains from 2024. So portfolios are definitely suffering in this most recent decline. The swiftness of the sell-off is quite incredible. I think that with the sell-off in the last couple of days, I do think for long-term investors, we've gotten valuations to the point where they're attractive as they've been in a long time. And I think that the market actually here, we were talking about this yesterday at our meetings, that there's some great opportunities that are coming up based on the rapid sell-off that we're seeing in the markets here. So, we saw VIX levels go up to 60. Sentiment was really negative. So it's not surprising to see this kind of bounce in the market.
Yeah, it's interesting, of course, to see that action in the VIX. There was actually a really interesting note from Bespoke, who said that on the VIX, so it closed at just below 47. intraday briefly traded above 60, to your point. It's only done that on 52 other trading days since 1990. So some really historic moves that we're seeing in volatility. But there's a lot of talk about indiscriminate selling. You say that there are opportunities to be found, but how do you separate out what is being disproportionately punished right now versus what actually should be re-rated?
Yes, I think that is actually the most difficult part, because there is still a great deal of uncertainty out there. I think, what's interesting is that this market sell-off and the conditions here are pretty much self-inflicted, right? So we have seen the markets correct and sell off to the point that's very similar to what happened during COVID. But what happened during COVID was clearly an unknown. There was a health crisis, and whereas today some of these policies and the tariffs that are imposed can be quickly reversed if someone chooses to do so, right? And I think that there are definitely negotiations going on, as you guys were talking about. Countries are coming to the table to try to make a deal. So it's very difficult to try to gauge how much is priced in. But I do think that we've seen some stocks that have sold off 50% from the highs. We've seen stocks sell off about 30%. I feel like for the ones where we have confidence and conviction in terms of the CapEx spending, in terms of the growth for the future, those stocks are probably where investors want to gravitate towards at this time.
I also want to know what you're going to do at this point with bonds, because the 10-year, we've been talking about it. I was thinking Jim Bianco is calling this is a tell your grandkids kind of moment in the bond market when you see a 10-year spike by almost 19 basis points yesterday and another 7 today. We're at 425 on the 10-year. We were sitting here with John Hancock's Matt Miskin, who said that you could see in the event of a recession, yields drop significantly. Was the two-handle, Katie, on the 10-year?
You did say a two-handle.
I almost have to say it twice. It's so low if you see a recession. So what do you do? I mean, do you pile into bonds, or is it too risky?
Yeah, so we think it's really important to have a diversified portfolio at this point. So bonds offer some protection in case, right? It's really, as we mentioned, it's really unpredictable. So bonds can offer a buffer in portfolios. We, in our strategy, we've been overweight fixed income for some time. We felt that valuations on equities were very expensive at the beginning of the year. Valuations have corrected on equities. And we also think that at this juncture, there is an argument to actually have a fully diversified portfolio, including bonds, including equities. And within equities, you also want to have a diversified portfolio. We've been coming into this year, we favor, for example, defensive sectors. But now, they've outperformed so much. And you've seen cyclical stocks actually get really beaten up here. And so from that standpoint, I really think a barbell strategy in terms of asset allocation, in terms of a balanced portfolio, and even within equities, barbell high growth and barbell value dividend stocks. I will also be neutral cyclicals versus non-cyclicals.
What about international? I mean, do you want to invest in a place where fiscal policy is better telegraphed and the rule of law is more consistent?
So I think that that's a good question. I mean, we've seen international markets rally year to date and have outperformed the U.S. markets. I think we're probably coming to the sort of end of that in the sense that, they've rallied on a valuation recovery. But, the international markets aren't necessarily better off from an economic growth standpoint. And so, at this point, I wouldn't necessarily be adding more money to the international markets. We keep our exposure there for diversification, but there does appear actually to be, I think, potentially a little bit more of a shift back to U.S. equities.
All right, Karen, got to leave it there. Great to see you, especially in person. That is Karen Pay of Fiduciary Trust. Meanwhile, the S&P 500 sitting near session highs, up about 3.8%. Let's get a look at what's moving underneath the surface with Bloomberg's Denitsa Seikova, and those health insurers certainly helping the this index.
Yes, Katie, we're seeing some of the big winners there. We're seeing gains of, they were as much as 11% in the earlier trading, but if we look at United Healthcare, if you look at CVS, we're seeing very strong 7-8% jump today. Of course, this is coming on the back of news that the U.S. government will pay private Medicare Advantage plans more next year than expected. And actually what we're hearing, this is way above expectations. We're talking about a 5% average rate, which is more than double what the government suggested in January. If we have to put a stat on this, this will be $25 billion more being paid next year from the government to Medicare Advantage. Clearly, this is lifting the sector. Some of those names are one of the few stocks that are up on the year. Obviously, today is especially good day. And those companies have been facing a lot of scrutiny in Washington lately. So this is kind of the best days for all of those so far this year.
Let's take a look at Nike also, because, of course, since Liberation Day tariffs were announced, it's been hard hit. It bounced back. It's bouncing back a little more today.
Yeah, for sure. Nike is kind of a good proxy of that buy the dip sentiment. It was actually up about 5% earlier today. We see still a gain of 4%. What we've seen there is a lot of the relief came after the negotiations with Vietnam, that the president was saying that they're doing well. Obviously, there is some expectation about Cambodia, Indonesia as well. Today, we have more positive language coming from the White House about the melting cube, and obviously that is helping, and Nike is a good proxy of that trade. That said, when it comes to earnings, we've seen some worrisome signs there, but still we clearly see that investors are happy to ignore that if there are positive developments on the macro front.
What's the story with CME? They got an upgrade?
Yeah, I love that. They got an upgrade from Morgan Stanley, CME, SIBO, so we're seeing all those big exchanges that will benefit from market volatility. And clearly today is a buy the dip day, but we saw the VIX, we saw what's been happening in the last few weeks. So while they're upgrading SIBO, while they're upgrading CME, they're actually putting equal weight on Robinhood. So there is an interesting arbitrage where Morgan Stanley is positive and is finding defensive positioning in those big names that work with institutions and bigger investors, but they're growing more pessimistic on Robinhood and all those brokerages that obviously work with retail. Even though we've seen some dip buying, clearly companies are worried that the retail traders will get a lot of pressure in the volatility, which practically we haven't seen since 2020.
Yeah, and Robinhood shares defiant today, up about 5.7%, but so is everything else. Bloomberg's Anita Sekova, great roundup. Now, coming up, billionaire Ken Griffin blasts President Trump's tariff policy. We'll bring you his comments next in our Wall Street Beat. This is Open Interest.
The names that move markets are on Bloomberg.
The labor market is holding steady and we're growing. Unemployment is holding steady. The labor demand is growing. We're seeing that in our companies. We're seeing the investments by major companies, tens of billions, hundreds of billions of dollars, where the workforce, the American workforce, is going to grow. If we grow this economy, if we have positive job growth, people will start to keep more of their hard-earned dollars. They'll start to invest. They'll start to save. And I think you'll see those markets respond.
Nobody covers business like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Let's get to high interest now. Look at what's making headlines around the world. President Trump is rejecting a European Union proposal to drop tariffs on all bilateral trade with the U.S. They wanted to completely get rid of them, and we decided no. That means his 20% tariff on EU imports will come into force tomorrow. The EU will begin consulting with member states and industry early next week on how it plans to retaliate. Global investors are finding credible alternatives to U.S. Treasury bonds as yields on the 10-year Treasury tumbled to below 4% over the past few sessions. Comparable rates in both Europe and Japan remain higher this year, while both are still well below Treasury yields. They're at levels that make them look more attractive. That might entice investors to shift allocations to markets where the policy outlook appears more stable. And Bluecrest Capital Management, a hedge fund founded by Michael Platt, is up 20% this year as it navigates the market turmoil sparked by President Trump's tariff moves. Bluecrest solely manages the wealth of Platt and his partners. It's delivered some of the best trading profits in the world. Shonali?
And it's time now for the Wall Street Beat. We are
below 4% over the past few sessions. Comparable rates in both Europe and Japan remain higher this year, while both are still well below Treasury yields. They're at levels that make them look more attractive. That might entice investors to shift allocations to markets where the policy outlook appears more stable. And Bluecrest Capital Management, a hedge fund founded by Michael Platt, is up 20%.
to the other center of power in Florida, which is, of course, Mar-a-Lago. Do the people around him share this view, or is it controversial?
Well, it's increasingly becoming the consensus view, it seems, especially among the billionaire fans of Donald Trump. I mean, they are probably having their oops moment right now. Few expected him to go through this sort of a policy and engage in this sort of a Twitter or X war, sending messages every morning and causing volatility in the market. So for sure, like Bill Ackman is one of them who came out and said that, he did a mistake and he doesn't, the tariff will cause economic nuclear winter, in his words.
So, Nishant, when people close to the administration or close to the GOP, and I understand that Griffin is not a donor to Trump, but obviously, he's giving $100 million to other Republican candidates and causes. Can you say that it's that their criticisms are based on losses? For example, Ackman had a big investment in Nike, right? Or Musk, obviously has big investments in China. And so Trump allies are saying, hey, they're just being critical because they're losing their own money. Is Ken Griffin losing money based on the tariff policy that went into effect on Saturday and what's going to go into effect tonight?
Well, Ken Griffin hasn't lost money. His investment firm was flat almost last week. It lost just 35 basis points. So in his case, especially, it doesn't seem to be driven by the returns itself, but generally its view on the economy and how the tariff policy is really starting to affect the economy, the chances of a recession in U.S., and of course the stock market and asset prices melting.
And, I would say we don't know the numbers actually for the first quarter for Citadel Securities, but given the volatility, what the bank's trading desks do, I'm sure will be a good barometer of how well they're doing. Nishant, I want to kind of knock down the notion that all hedge funds are failing or all family offices are failing in this environment. You are out with the headline of Michael Platt's Bluecrest just soaring. Bridgewater, at least through March, was really up double digits, close to double digits, if not more. Schoenfeld is up. Who's benefiting in this environment?
I mean, really, Michael Platt making money during episodes of volatility is not news anymore. Like, he does it all the time. He has this amazing money printing machine. I mean, look at his returns. It's annualizing at 30-40% since he returned capital to investors. The key behind his stellar performance is, of course, mountains of leverage. That's what makes it trade click, and that's why he makes so much money. But generally, if you look at multi-strat world, I mean, they have fared, considered really well. I know zero is not a number that one celebrates when it comes to returns, but essentially, if you were flat last week, that was a remarkable achievement, and we see that across multi-strategy hedge funds. Schoenfeld even made some money. Citadel kind of flattish. Millennium minus 70 basis points. Balyasny flat. So these are some really solid numbers at the time of this market chaos.
All right, Nishant, thanks so much for joining us. Bloomberg's Nishant Kumar reporting on hedge funds out of London. Still ahead, Elon Musk calls Trump trade advisor Peter Navarro a moron, says he's truly a moron as their White House feud turns ugly. We'll have details next. This is Bloomberg Open Interest.
The names that move markets are on Bloomberg.
U.S. consumers are flexible. We have options. We can produce stuff at home. We have a variety of countries we can import stuff. We can substitute into home production. Whereas countries that sell to the United States are inflexible. They've only got the United States to sell to. There's no alternative. So they're the ones who will bear the burden of these tariffs, which means that there's going to be very limited pass-through into downside economic risk or into higher prices. So I think that a lot of folks have got that wrong.
Nobody covers business like Bloomberg. Context changes everything. The Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
A new White House feud is spilling over into the Twitter sphere. Peter Navarro, President Trump's top trade advisor, who also apparently goes by the pseudonym Ron Vera, dismissed Elon Musk's push for zero tariffs between the U.S. and Europe, calling the Tesla CEO not even a car manufacturer, but a car assembler reliant on parts from other countries. Musk, meanwhile, just posted on X, quote, "Navarro is truly a moron. What he says here is demonstrably false. By any definition whatsoever, Tesla is the most vertically integrated auto manufacturer in the United States of America with the highest percentage of American content. Navarro should ask the fake expert he invented, the aforementioned Ron Vera." Let's bring in Bloomberg technology co-host Ed Ludlow with details. So aside from, you know, the fake economists that Navarro cites in his research, what do we know about this feud?
Well, I think there is certainly a rift between Elon Musk and others around Donald Trump on the issue of tariffs, right? There were reports over the weekend that Musk had made a direct appeal to Trump in the hours that preceded the news of Monday and the markets of Monday to rethink the tariff stance. What's interesting, though, is like Tesla is the most insulated of the US automakers and the foreign OEMs that manufacture in the United States, right? There is data, it is in Tesla's 10Ks and the annual impact report that it publishes about the volume and locality of components that are assembled. So take Austin, for example, Austin, Texas. Tesla's VP of Finance pointed out that the powertrain or drivetrain components, not just the assembly of the car itself, but the motor and the battery pack are all done there locally on site. And, you know, Musk himself referenced this Kelley Blue Book data that Tesla makes the most American-made cars. But that's data that's there to see. Clearly, there is some pressure, though, coming from somewhere.
Yeah, absolutely. I do want to check at Tesla shares up about 6.7%, close to a session high. I don't know if that's related to this feud that we're seeing play out on social media. But, Ed, you make a good point. I mean, that there's folks within Trump's inner circle who are feuding right now. Elon Musk, obviously, is part of that feud. And this comes as potentially we're counting down to when his time as a special advisor to this administration comes to an end.
Yeah, I mean, the Doge position is a remit. You know, it's in the documents communicated by the White House that it has a term limit up until, I think, July 1st, right? And the White House has very recently denied a report that Musk would leave that role early. They said it was, you know, fake news. But at the same time, like, up 6% in a session, what does that mean in aggregate over a week where Tesla's been absolutely hammered? There's big concerns from the market that just by association, forget the tariff risk. Of course, there is some modeled into Tesla's share price because raw materials, and there is an element of cars exported from China to the European market. It's a global story, but the association risk is the bigger issue with this stock, right? That consumers have a strong opinion of Elon Musk by his association with what the administration's doing, and that might have more of an impact.
We have less than a minute left. Where do you see Elon Musk's objectives clashing the most with the administration's?
Well, the one that I'm waiting on, you know, people have short memory. Regulations appeared for this nascent tech.
Intraday rally since November 2022. Remember, 2022 was a painful year for the S&P 500, so do with that what you will. But coming up, China pledges retaliation against Donald Trump's latest tariff threats. We'll speak with the CEO of Snap-on next. This is Bloomberg.
What's the best thing and what's the worst thing about trying to put money to work in this market?
Technically, we're an endowment, but we use the best of the endowment model and the hedge fund model, so we can react very quickly. And I think we're very good, I would argue probably one of the best in the world, at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes. And I continue to like that trade, so we're holding that position. And again, when you see kind of the micro and macroeconomic data coming out of the U.S. and you see the data in China, I think you will see a tactical deal out of economic necessity between China and the U.S. And I think when you look at investors generally, they've left China for dead. So I think there's going to be money forced into that market.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, China says it's not backing down from a tariff war with the United States. The Chinese Ministry of Commerce said in a statement, if the U.S. insists on its own way, China will fight to the end. Tools giant Snap-on will speak to his CEO now, Nick Pinchuk. He just returned from a trip to Asia. He joins us now to get a boots-on-the-ground read on manufacturing overseas. And Nick, my understanding is that you have 5 factories in China. So what does this mean for your business?
Well, Katie, I think, we're a little different in that we tend to make in the markets where we sell. So our 5 factories in China are there principally to try to sell in the Asian market. We make in the 80% of what we sell off the trucks is in the United States. Is made right here. But in terms of what it means for the factories in China, of course, they export some to the United States. And so they may lose that volume depending on how high the tariffs are. 104%, which would be the 10 plus 10 plus 25 and 34 and 50 more would be 100. That would be difficult to overcome. And so we'd probably adjust to that. But I think they're not shaking in their boots. They're worried about it, and they'd have to step up their efforts to focus on the Asian markets. That would be what happens. I do think, though, in Asia, that many of the companies that are, particularly in China, are operating at small margins and can't do very much about absorbing the tariffs. So they're kind of worried about it. They'll probably try to adjust for a while, but they won't be able to do anything. And I don't think the Chinese government is in a position. I think they're pretty serious about trying to resist the tariffs because I think Xi Jinping has sitting on an economic difficulty right now. He's not going to want to seem to kowtow to America. In fact, I think he said something like that last night. And so I believe we're in for a little bit of, turbulence with the China market as well.
Nick, I got to ask. I was in Austin last weekend riding a Harley-Davidson Fat Bob, and I needed to change one of the foot pegs. So I pulled over quickly at Home Depot, and I bought a Husky, made in China double ratcheting wrench. It was $32, I think. I look at the same wrench on your website, and it's like $110. So already you're priced much higher than that Chinese-made stuff at Home Depot. Are you going to have to raise prices even further when these tariffs go into effect?
Actually, right now, I don't know how we can afford to sell it for that price. It's so good a wrench. It's like a bargain. But look, I don't think that in the United States, actually, wrenches are pretty much made here. We're using American steel. Now, to the extent American steel goes up, maybe we'll have to price for that. The thing about this is what's kind of interesting when you step back and look at the tariffs. Right now, we're in the fog of tariffs. You know, I think this is Clausewitz or Robert McNamara talked about this kind of thing. There are so many variables that people have been trying to figure out how to sort their way through it. But the way forward is going to be that they are going to try, you know, companies are going to try to resource or reshore things. We're already reshored, so we don't have too much of a problem. We're not immune to the tariff problems, but we're resistant to it. But here's the difficulty. It's going to take years. It's not so easy for that to happen. To make something like handles, one thing to assemble in the United States, it's another thing to make components out of steel or other difficulties in complex shapes and manufacture them. We had a competitor who tried to do this. People talk about, well, maybe technology will ease the way. We'll all have robots. We have robots all over our plants, but they have been robots and technologies that's been overlaid on know-how that's already there. We've had competitors who have tried to build tools in the United States, robotizing everything and spit up blood all over it, had to write it all off. So it's not so difficult. So you're going to see some time for this to come on.
Well, one other aspect of this that I find to be confusing at this juncture in the trade talks is you have President Trump coming out talking about his talks with South Korea this morning. You have Kevin Hassett of the National Economic Council talking about prioritizing trading partners, allies like South Korea and Japan. You have Apple talking about India as another base for making iPhones, for example. What if this isn't a matter of onshoring all manufacturing? To what extent is this just about moving manufacturing and imports away from China?
Okay, if you want to move away from China, I say good luck. Vietnam, I was in Vietnam in the war, and I've been there maybe dozens of times since. Tough. India, yike. So it's not so easy to do that. You might as well move it to the United States. See, the thing about the United States, the advantage the Chinese have is not only lower labor, they have lower regulations and they have an availability of the workforce. We need that in the U.S. One of the things I will say, and the National Association of Manufacturers will say this, we don't need the tariffs to impel onshoring. After the pandemic, when the supply chain was interrupted, there were all kinds of industrials trying to go here and say, we cannot depend on these long supply chains. The manufacturing goods are too important. We can't leave our prosperity in the hands of other countries that might interrupt them by happenstance or by intent. And so we ought to onshore. But it wasn't easy to do because there wasn't enough skilled labor, and the regulation is tremendous here. The National Association of Manufacturers says that the average manufacturer.
और guys, book the profit in natural gas में profit book कर लो. अच्छा trade मिल गया है, exactly resistance पे ही था. Sell किया और look at the momentum. ठीक है, बुक कर सकते हैं. 12 पॉइंट आ गए हैं, अच्छा प्रॉफिट हो गया है जिन लोगों ने बुक कर लिया है. बाकी अब 8 PM हो गया, कोई डेटा तो नहीं है, देखते हैं थोड़ा और मोमेंटम कंटिन्यू करे. क्रूड ऑयल, बाकी नेचुरल गैस तो ऐसा रुका हुआ है, क्या ही बताएं, मोमेंटम ही नहीं हो रहा है. करना क्रूड ऑयल रुका हुआ है, मोमेंटम ही नहीं हो रहा. नेचुरल गैस तो थोड़ा बहुत मूव किया है. ऐसे ट्रेड रोज मिले ना. बाकी देखते हैं. अभी ये कैंडल ओपन इक्वल टू हाई है, क्या दोबारा ट्रेड ले नहीं सकते डायरेक्टली. ओपन इक्वल टू, मैंने सोचा था अगर ओपन इक्वल टू हाई नहीं बनेगी तो यहाँ से बाई कर लेंगे, बट दिस कैंडल इज ओपन इक्वल टू हाई. स्टिल सपोर्ट, ये है सपोर्ट ही, बट थोड़ा सा ना ये ओपन इक्वल टू हाई पे नहीं करेंगे बाय. मार्केट को अगर बाइंग करना है तो कैंडल को वापस क्लोज करना पड़ेगा 315 के ऊपर. अभी 7 मिनट है. 315 के ऊपर अगर कैंडल 315.3 के ऊपर अगर कैंडल क्लोज आती है तभी यहाँ पर बाई करेंगे, नहीं तो अवॉइड करेंगे. ठीक है, perfect level, perfect trade and perfect marking. ठीक है, बाय मत कर बैठना नेचुरल गैस में. ओपन इक्वल टू हाई कैंडल है, सपोर्ट है, फिर भी नहीं करेंगे. वेट करते हैं कैंडल कहाँ क्लोज होती है उसके बाद. बाकी अगर यहाँ नहीं रुकता है यहाँ पर अगर, तो फिर थोड़ा और फॉल करना चाहिए, मतलब डायरेक्टली तो नहीं करेगा, थोड़ा कंसोलिडेशन करके थोड़ा पुल बैक देके कर सकता है। लेट्स सी, ऊपर आ जाए क्लोजिंग तो बेटर ही है। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। कल भी अच्छे ट्रेड थे, आज भी अच्छे ट्रेड है। फिलहाल आज एक ही ट्रेड मिला है क्रूड ऑयल में, तो भी निकल गया लेवल, नहीं तो उसमें भी ट्रेड अच्छा बन जाता, बट कोई बात नहीं, होता रहता है। लेट्स सी, एक और ट्रेड अगर मिल जाता है ना, बेस्ट रहेगा। बड़ी इंपॉर्टेंट हो जाएगी, ध्यान रखना क्लोजिंग कहाँ आ रही है, क्योंकि अगर क्लोजिंग ज़्यादा ही नीचे आ गई तो फिर ब्रेकडाउन के चांसेस बहुत बढ़ जाएंगे एक्चुअली में। 314 के नीचे ना जाए क्लोजिंग, अगर इस लेवल को होल्ड करना है प्राइस को। 315 के ऊपर आ गई क्लोजिंग तो फिर तो बेटर ही है, फिर तो बाइंग बन जाएगी डायरेक्टली, बट अगर मान लो नहीं भी आई उतने ऊपर क्लोजिंग और थोड़ा सा नीचे भी आती है तब भी ठीक है, चांसेस रहेगा। इसको बुक कर लेंगे, ट्रेल कर लेंगे। ओपन इक्वल टू हाई कैंडल का लॉजिक क्या होता है? ओपन इक्वल टू हाई कैंडल देखो क्यों बनी, कब बनती है एक्चुअली, कैंडल तो अलग अलग तरह की कहीं पर ही बन सकती है, ठीक है, ऐसा कुछ नहीं है। ओपन इक्वल टू हाई कैंडल बनी है, इट मीन्स वहां पर ओपन होते ही हाई बन गया, मतलब ओपन होते ही मार्केट में सेलिंग आ गई नीचे, फिर एक हो सकता है लो हो और यहाँ क्लोजिंग हो जो भी है रेड कलर की कैंडल पे, तो मतलब ओपन होते ही क्या हुआ है, ओपन होते ही सेलिंग आ गई है। तो सोचो ओपन होते ही सेल कौन कर सकता है, ऐसी कैंडल कौन बना सकता है? क्या आप और मैं बना सकते हैं? पॉसिबल ही नहीं है। इस तरह की कैंडल बनाने के लिए आपको एक बहुत बड़ा ऑर्डर लगाना पड़ेगा, तब जाके कुछ ऐसा कैंडल बनेगा जहां पर ओपनिंग होगी वहीं से सीधा सेलिंग आ गई नीचे को, प्राइस ऊपर गया ही नहीं, बायर्स मतलब आए ही नहीं उस लेवल पे, या आए भी होंगे तो इतनी क्वांटिटी में नहीं, सेलर्स इतने ज़्यादा आ गए कि प्राइस सीधा ही गिर गया। तो सोचो कोई ओपन इक्वल टू हाई बना के कैंडल अगर बना रहा है तो इट मीन्स किसी बड़े प्लेयर ने वहां पर अपना ऑर्डर प्लेस किया है। तो अब मान लो ये सपोर्ट है जो कि है, मैं यहाँ पर बाई करने जा रहा हूँ, मैं एज अ रिटेल ट्रेडर की बात कर रहा हूँ, तो मुझे दिख रहा है यहाँ पर ओपन इक्वल टू हाई बन रही है, कोई बड़ा प्लेयर यहाँ पर सेल कर रहा है, मैं क्यों बाई करूँ उसके अगेंस्ट? ठीक है, हो सकता है वो ट्रैप करने की कोशिश करे, हो सकता है वो यहीं से बाइंग आ जाए वापस, हो सकता है ब्रेक डाउन कर जाए, तो वी डोंट नो एक्चुअली। अगर ये नॉर्मल कैंडल बनती तो वी कैन बाई डायरेक्टली, जैसे यहाँ पर ये देखो एक लेवल पे कैंडल बनी थी, ये कोई ओपन इक्वल टू लो नहीं थी कि ओपन होते ही बाइंग आ रही है, ऐसा कुछ नहीं था, नॉर्मल कैंडल थी तो डायरेक्टली सेल कर सकते थे, बट यहाँ पर ओपन इक्वल टू हाई है, इट मीन्स कुछ ना कुछ हो सकता है यहाँ पर, हो सकता है ब्रेक डाउन हो जाए, हो सकता है ट्रैपिंग हो जाए। तो इस केस में क्या करते हैं, अगर सपोर्ट पे ओपन इक्वल और कहीं पर बने फर्क नहीं पड़ता, ठीक है, कहीं पर ही बन जाए उससे हमें कोई मतलब नहीं, सपोर्ट और रेजिस्टेंस इज इंपॉर्टेंट। तो सपोर्ट पे अगर ओपन इक्वल टू हाई बन रही है तो हम वेट करेंगे, या तो ब्रेक डाउन कर दे तो अच्छी बात है, फिर तो ट्रेड ही नहीं बनेगा बाइंग का। कभी कभी क्या होता है, ट्रैप करने के लिए मार्केट ब्रेक डाउन करता है, ओपन इक्वल टू हाई बना के रिकवर कर लेता है लेवल के अंदर, इट मीन्स उसने ट्रैप करने की कोशिश करी, नीचे एसएल उड़ा दिए और फिर रिकवर करता है, तो उस केस में फिर हम इस तरह के फॉर्मेशन पे बाई करते हैं, या फिर वो कैंडल अपना खुद का हाई ब्रेक कर देती है, मतलब जिसने सेल किया था उसी का सेल चला जाता है बड़े प्लेयर का, तो फिर हम एक्सपेक्ट कर सकते हैं कि यहाँ पर बायर बहुत स्ट्रांग है और फिर ऊपर को जा रहे हैं। सेम फॉर रेजिस्टेंस एज वेल, रेजिस्टेंस पे भी सेम ही चीज़ होती है फॉलो, और ये हर जगह होती है, याद रखना, निफ्टी, बैंक निफ्टी, कॉमोडिटी, फॉरेक्स, एवरीवेयर। सिल्वर का व्यू देखा नहीं है सिल्वर आज, बाकी किसी ने नेस्डेक पूछा था, वो रेजिस्टेंस को हिट करने वाला है, सेलिंग प्लान कर रहे हो तो वहां पर कर सकते हो, 18,530 टू 520। आईजी ब्रोकर की बात कर रहा हूँ मैं, याद रखना, अलग अलग चार्ट हो सकते हैं अलग अलग ब्रोकर के। सिल्वर को देख लेते हैं, एमसीएक्स पूछ रहे हो या फिर फॉरेक्स, लेट मी नो। सिल्वर, एमसीएक्स और फॉरेक्स, लेट्स सी एक और ट्रेड अगर बनता है। नेचुरल गैस में किस किसने बुक कर लिया भाई? सबने बुक कर लिया या फिर अभी भी होल्ड करके बैठे हो? वैसे हो गया है टारगेट, ध्यान रखना। एमसीएक्स, ठीक है, देख लेते हैं एक सेकेंड। MCX में देखो सिल्वर को देखोगे फिलहाल के लिए करंट लेवल पे प्राइस जहां पर अभी चल रहा है, मॉर्निंग पे ओपन हुआ था, स्लोली स्टडी ऊपर गया था, ऊपर से सेलिंग का प्लान कर सकते हो, कोई डेटा तो नहीं है ना आज, सेलिंग का प्लान कर सकते हो। मार्केट में जो बाइंग आई है वो लिक्विडिटी लेने वाली बाइंग है। ये जो बाइंग आई है इट इज़ नॉट अ लाइक कोई नीचे से लिक्विडिटी लियो फिर बाइंग आई हो, ये मार्केट को लेके जाया जा रहा है ऊपर रेजिस्टेंस पे, सो दैट सेल किया जाए। तो मेरे अकॉर्डिंग ऊपर से सेलिंग कर सकते हो इन नेचुरल गैस। व्यू तो वैसे अभी फिलहाल के लिए साइडवेज है, बट ऊपर से सेलिंग एक्सपेक्ट है। ठीक है, M6 की बात कर रहा हूँ, याद रखना मैं फॉरेक्स नहीं देख रहा हूँ, करंट मंथ का चार्ट। हाँ ठीक है, लाइक भी करते रहो गाइस जिन लोगों ने नहीं किया है। इसको एक बार उस लेवल से देखें क्या। ठीक है, देखो ये अभी लुक एट दिस नेचुरल गैस, लुक एट दिस कैंडल क्लोज होते होते ब्रेक डाउन कर दिया। व्हाट इज दिस कैंडल showing to us that there is a support area but the candle is open equal to high, it means seller enter over here। why seller enter at the support? this is a support, तो seller क्यों आ गए भाई? वहां पर सपोर्ट है तो बाइंग होनी चाहिए थी, सेलर क्या कर रहा है? इट मीन्स कोई बड़ा प्लेयर है जिसने यहाँ पर एसएल उड़ाने थे बायर के, उड़ा दिए। जबकि बायर यहाँ पर सोच रहे होंगे अरे तो बॉटम बना है, यहाँ से पहले ही बाइंग आई है फिर बाइंग आएगी, उड़ा दिया एसएल। समझ रहे हो गेम? इसलिए कैंडल इंपॉर्टेंट हो जाती है लेवल पे स्पेशली। अब दो पॉसिबिलिटी है, हो सकता है फेक ब्रेक डाउन दे, हो सकता है रियल दे, आई डोंट नो, वी डोंट नो एक्चुअली टिल नाउ। अगर फेक ब्रेक डाउन होगा तो ये रिकवर करेगा, लेवल के ऊपर कैंडल क्लोज करेगा, फिर हल्का सा पुल बैक में बाई कर सकते हैं अगर फेक ब्रेक डाउन हुआ। नहीं करता है तो फिर नीचे नेक्स्ट सपोर्ट जो भी होगा उस पर देखेंगे। ठीक है, 7K बुक कर लिया नेचुरल गैस में राहुल जी, ग्रेट। 4300 बुक नेचुरल गैस गौतम जी, ग्रेट ग्रेट। लेवल फॉर वॉच आउट इन सिल्वर, डे हाई को आप कंसीडर कर सकते हो, एंड इसके अलावा MCX में भी ना, इसमें थोड़ा सा एक सेकेंड यार, एक सेकेंड, इतना पीछे जा भी नहीं रहा है चार्ट। हाँ अभी ये ठीक है, श्योर श्योर कोई ऐसा नहीं है। हाँ जैसे मैंने बताया 90,000 ना, 90,550 इज अ रेजिस्टेंस अप्रोक्सीमेटली। तो 90,550 से लेकर 91,130 इज अ रेजिस्टेंस जोन। इसके ऊपर नहीं जाना चाहिए प्राइस, अगर इसके ऊपर चला गया तो फिर प्रॉब्लम हो जाएगी सेलर्स के लिए, क्योंकि फिर मार्केट रिएक्ट कर देगा सपोर्ट की तरह। तो यही लेवल है। वैसे बाय द वे यहाँ पर कल एक बार बाइंग सेलिंग आ चुकी है। 7 अप्रैल 2025 कल 7:30 पे यहाँ से सेलिंग कल आ गई थी, सेकेंड टाइम आ रहा है यहाँ पे आके, थोड़ी बहुत सेलिंग भी आ गई खैर अब तो इट इज़ अ रेजिस्टेंस। फॉरेक्स में नेचुरल गैस सपोर्ट पे नो ब्रेक सपोर्ट। फॉरेक्स का देखा नहीं मैंने, MCX का देखा था, MCX में तो ब्रेक हो गया ऑलरेडी। MCX में तो हो गया ब्रेक। कोई नेक्स्ट सपोर्ट हो तो, MCX में ब्रेक हो चुका है सपोर्ट, कैंडल लेवल के नीचे हो गई है क्लोज। लेट्स सी रिकवर करता है या फिर नया सपोर्ट बनाता है नीचे आके। मैं अभी इंटरेस्टेड नहीं हूँ बाइंग में, बाइंग के लिए रिकवर करे या फिर नेक्स्ट सपोर्ट पे आए। देन ओनली इंटरेस्ट रहेगा वापस बाइंग के लिए। बाकी सेलर निकलना चाहो तो निकल जाओ, कोई होल्ड कर रहा है तो ट्रेलिंग एसएल का यूज़ कर लो, हाफ प्रॉफिट बुक करके। नेक्स्ट सपोर्ट और कहाँ मिल सकता है इसको? अरे काफ़ी अच्छा फॉल आ गया, लुक एट दिस, दैट इज़ अ ब्यूटी। ओके देखो, नेचुरल गैस में नीचे एक सपोर्ट रहेगा, यहाँ बाई करते हैं अब, ठीक है। ये सपोर्ट तो गया, खैर इसको छोड़ देते हैं, इसकी ज़रूरत नहीं है। रीटेस्ट करेगा तो देखेंगे, रीटेस्ट करेगा तो देखेंगे। अभी नीचे एक सपोर्ट है, वहाँ से बाइंग कर लेते हैं और बेटर है। कि एक तो रीटेस्ट करा जा सकता है शायद इसमें, अभी थोड़ा सा नीचे सपोर्ट है। श्योर। नेक्स्ट सपोर्ट 300 दिखा रहा है, कैन बी शॉर्ट अगेन। अभी यहाँ पर नया लेवल नहीं बनाया, रीटेस्ट पे देखते हैं। अभी नीचे सपोर्ट है 330 का, मुझे नहीं पता, मैंने 300 देखा नहीं है। नेक्स्ट सपोर्ट एक बार चेक कर लेते हैं पहले। कहाँ है सपोर्ट? सपोर्ट, हाँ हाँ, देखते हैं। अगर एक कैंडल ना थोड़ा सा 310 के नीचे या 311 के नीचे क्लोज कर जाती है ना, और उसके बाद रिकवर करती है, तब मजा आएगा बाइंग करने में। इस कैंडल की क्लोजिंग देखते हैं, क्लोजिंग कहाँ आती है, बड़े इंपॉर्टेंट कैंडल है 15 मिनट की। Which FPG is strong like 15 minute or 1 hour or 4 hour? Higher the time frame, higher the accuracy. बाकी ऐसा कुछ स्पेसिफिक नहीं होता कि ये एफपीजी ज़्यादा स्ट्रांग होता है, ऐसा कुछ नहीं होता। 4 आवर टाइम फ्रेम का एफपीजी ब्रेक हो जाएगा इजीली, और 15 मिनट का या फिर 1 मिनट का काम कर जाएगा। तो एफपीजी चाहे वो कहीं पर ही बने, कैसे ही बने, किसी भी टाइम फ्रेम पे बने, उससे ज़्यादा फर्क नहीं पड़ता। इंपॉर्टेंट है कि वो सपोर्ट और रेजिस्टेंस के पास बने, तो ज़्यादा वो एक्यूरेट होता है, चाहे किसी भी टाइम फ्रेम पर। बाकी वो नॉर्मल फिनोमिना है, हायर द टाइम फ्रेम हायर द एक्यूरेसी, लोअर द टाइम फ्रेम लोअर द एक्यूरेसी। एफईजी का ऐसा कोई डायरेक्ट कनेक्शन नहीं है कि ये स्ट्रॉन्ग है या एफईजी ये नहीं है। क्लोजिंग देखेंगे, क्लोज, हाँ सही है, आने दो। ठीक है, अब जैसे ये नेचुरल गैस को ही देख लो, यहाँ पर कौन सा एफईजी है, बट सेलिंग अच्छी आ गई ना, तो एफईजी से उतना फर्क नहीं पड़ता। हाँ सपोर्ट रेजिस्टेंस पे है तो तब थोड़ा लेवल को स्ट्रॉन्ग कर देते हैं। ठीक है, सपोर्ट रेजिस्टेंस को थोड़ा ज़्यादा स्ट्रॉन्ग कर लेते हैं, बट हाँ वो सपोर्ट रेजिस्टेंस होना चाहिए, ऐसा नहीं कि कहीं पर भी हम सपोर्ट कह दें कि ये सपोर्ट है, रेजिस्टेंस है, ऐसा नहीं होना चाहिए। नहीं तो एफईजी तो आपको इतने दिख जाएंगे कि कमी नहीं होगी उनकी। Moving average will be different for different time frames. How to decide which one are reliable? प्रसाद सत्या जी, That is a very difficult question for me actually, because I'm not using moving average. मुझे कुछ आइडिया नहीं है सर इसका. ये आपको वही बता सकता है जिसने इसमें थोड़ा सा ग्रेजुएशन, पोस्ट ग्रेजुएशन या फिर डॉक्टरी की पढ़ाई करी हो, पीएचडी वगैरह. इंडिकेटर से मेरा ज़्यादा काम बनता नहीं है, सो आई एम नॉट अवेयर ऑफ दैट कि कौन सा मूविंग एवरेज यूज़ करना चाहिए, कौन सा नहीं करना चाहिए, कौन सा सही होता है, कौन सा नहीं होता, क्योंकि मैं खुद यूज़ करता नहीं हूँ तो मुझे आइडिया भी नहीं. मैं बहुत पहले यूज़ करता था, 5 PM में करता था, 15 मिनट में और 5 मिनट में. उसके बाद से मैंने कभी किया नहीं है, बहुत रेयरली किया होगा. मुझे तो किसी ने लाइव में ही बताया था शायद, वो को 200 मूविंग एवरेज भी होता है, 50 मूविंग एवरेज भी होता है, 20 मूविंग एवरेज भी होता है. तो मुझे इस बारे में कुछ ज़्यादा आइडिया नहीं है. ये आप उनसे पूछ सकते हो जो थोड़ा करते होंगे. बहुत सारे हैं यूट्यूबर लाइव में करते हैं जो मूविंग एवरेज पर करते हैं, अच्छा करते हैं. वो बता सकते हैं इसके बारे में. जैसा थोड़ा बहुत जितना मुझे पता है शायद ऐसा ही होता है, शायद बता देना अगर मैं गलत हूँ तो. लाइक 20 मूविंग एवरेज को 5 मूविंग एवरेज क्रॉस करता है तो बाई करते हैं ऊपर की साइड, और नीचे एसएल रखते हैं, और नीचे ब्रेक करता है तो सेल करते हैं. ऐसा कुछ ही है क्या, जितना मुझे याद है थोड़ा बहुत. बाकी का आइडिया नहीं है. क्रॉस चेक कर लेना भाई. कोई पता लगा जाके ट्राई करने लग गया. मुझे जितना याद आ रहा है एक बार किसी ने लाइव में बताया था स्ट्रीम पे. रुक रहा है, सही है. हाँ सेलर निकलना चाहो निकल जाओ, हो गया टारगेट सेलर्स का. क्रूड में देखते हैं, मुझे लग रहा है क्रूड में एक ट्रेड बनने की ज़्यादा पॉसिबिलिटी लग रही है नेचुरल गैस के कंपैरिजन में. लाइक भी करते रहो गाइस, इन लोगों ने लाइक नहीं किया है. स्ट्रीम ज़्यादा देर में रहूँगा नहीं आज स्ट्रीम पे भी. ओके ये तो सेलिंग के लिए. वो कोई सब मेरे साइड से ट्रेड नहीं है नेचुरल गैस में. बनेगा तो मैं बता दूंगा. एक पॉसिबिलिटी लग तो रही है, क्लोजिंग थोड़ा नीचे आए तो फिर बाइंग सेलिंग की. 311 के नीचे क्लोजिंग आती है तो बढ़िया है, इजी ट्रेड मिल जाएगा. बाकी एक बार देख लेता हूँ कोई लेवल मिस तो नहीं हो रहा है मुझसे. यहाँ पर तो नहीं हो रहा है.
It's the fastest gain we've
सर
seen
सत्या जी
in
स्क्रीन पे नंबर दिया हुआ है, उस पर कांटेक्ट कर सकते हैं. थैंक यू गुजारन पोले जी. देखते हैं क्रूड ऑयल में कोई ट्रेड बनता है तो नीचे सपोर्ट्स पे कैंडल का ध्यान रखेंगे. नेचुरल गैस में अभी और नहीं है कुछ, बनेगा तो देखते हैं.
JP Morgan as well as Cole Smead from Smead Capital Management. This is Bloomberg.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. We continue to cover the aftermath of President Donald Trump's sweeping tariffs, with stocks rebounding on hopes of trade deals following the biggest rout in 5 years. I focus in on a NASDAQ 100 that is up 3.5%. Only 3 stocks are generally in the red on the entirety of the benchmark, as there are hopes on South Korea deals, Japanese deals. Ed, what's on the micro perspective?
Yeah, 2 of the biggest technology names that are in the headlines, and that's Tesla and Micron. Tesla is based around a feud between Elon Musk and Peter Navarro. Navarro commenting on television that Tesla is not a car manufacturer, it's a car assembler, which prompted Elon Musk to call him a moron, quote, and explain that actually most of Tesla's components in the car itself are built with items originating from the US. The stock at session highs, whether that's direct, who knows. Micron, Reuters reporting that Micron's passing on the cost of tariffs to customers in its supply base. The market cheered that. No comment or official word from Micron yet. They haven't answered my call, but interesting in the market's context.
From a micro perspective to the macro more broadly, Ed, trade headlines. Look, they're continuing to drive the markets, of course, with optimism building for trade deals with South Korea, with Japan, but China not backing down on President Trump's tariff threats, vowing to, quote, fight to the end. Let's break it all down. Bloomberg's Mike Shepard is with us. Very different tactics. Talk through the latest in terms of South Korea.
Well, with South Korea, they seem to be following in the steps of Japan and trying to open up very quickly negotiations with Washington on some kind of deal that would ameliorate or eliminate altogether the reciprocal tariffs that are about to take effect at midnight tonight. And those tariffs, of course, would be damaging to economies around the world, and especially to the trade relationships between these 2 tech centers, Japan and South Korea, that are so important as well to Silicon Valley. Now, the mood music is leading some to think, what would happen with China? Is China ready to also somehow approach President Donald Trump. And the president indicated in his Truth Social post that he was waiting for a call from Beijing. But the mood music, as you indicated, is a little bit different in China. They're sending mixed signals. On the one hand, they are pointing to a willingness to talk, to actually have this conversation about trade. But at the same time, they say that they are willing to fight to the end. And this is in response to President Donald Trump's threat to impose even more tariffs on China if Beijing follows through with its pledge to keep its retaliatory tariffs in place.
Mike, I'm trying to keep this deeply focused on the technology sector, right? And it's hard to piece it together. Why are the Korea headlines important? One reason, Korea sends $10 billion worth of chips to the US every year, 80% of them memory. You saw the Micron headlines from Reuters. That's one part. The other is that China's not moving, right? And that was the speculation of the last 24 hours. How do they react? What happened overnight was really, really severe. Just recap the wording that the Chinese issued.
Well, when we think about the Chinese, they were talking about how they would fight to the end, and that really sent a signal to the markets and to investors and even to companies that we could be in this for the long haul. And if you're Apple, with so much production, for example, 80% of iPhones are still made in China. Even as Apple has tried to diversify its production lines, it has been much tougher. So the signs of a thaw, perhaps, with Seoul and with Tokyo do lend some optimism, especially for producers of products. You think of Sony, you think of SK Hynix, you think of Tokyo Electron and some of the more sophisticated chip-making equipment that they produce. All of these things are in play. But China is really the big target here just because of the size of the economy and the amount of trade that the U.S. does with China.
Bloomberg's Mike Shepard. It's Apple exactly where we want to go next. Shares of Apple rebounding in the session after what was basically biggest three-day drop since the 2000s. President Trump's tariff threats are sending customers to the stores. There's panic buying of iPhones ahead of speculated but potential price increases. Joining us, Bloomberg Intelligence's Anurag Rana. Your job is to take data, your own data, third-party data, look at the case, best and worst case scenario. What do you do with data or reporting that there's panic buying of iPhones, particularly in this country?
Yeah, but the thing is that may help, let's say minor earnings in this upcoming quarter, but it doesn't take away the big risk Apple has on procuring more phones for down the road when the next iPhone cycle comes in, when the December quarter comes in. I mean, there is a lot at stake right now, especially when it comes to the size of the tariffs that may hit China.
That's so important that ultimately May 1st, when we get their fiscal second quarter earnings, unlikely to show this. It's not going to show up until their fiscal third quarter. And meanwhile, they try to navigate not current inventory, but future supply side, maybe coming more from India. Where is that going to help them on the margin front? How much can they rely on that, Anurag?
See, they can bring some phones from India, but, there are a large portion of the Pro models. India is getting hit with tariffs also. We don't know if somebody finds out that, okay, they are circumventing and trying to get phones from India. We won't have an additional tariffs on that. So there's a lot going on right now. And almost on a daily basis, we hear about some new tariffs being slapped at. But we can remember, at the end of the day, it's been the whole target of that is to try to open more factories in the U.S. unless there is some negotiation between the two countries. So I don't think Apple escapes this anytime in the near term.
Anurag Rana, putting it plainly, we thank you from Bloomberg Intelligence. For more on tech markets, we broaden it out from just Apple to across the board. Dip buyers emerging. Jay Jacobs is with us, BlackRock US head of thematic and active ETFs. Boy, have we seen some inflows and outflows, Jay. Break it down what today looks like versus the last couple of trading days.
Well, we're seeing a bit of a relief rally here and very strong volumes in corners of the market where I think people have been looking for buying opportunities. If you look at areas like artificial intelligence, look at areas like small caps, a lot of investors have been hunting for deals in these areas. And now that they're off, 10, 15, 20%, it represents a really attractive entry point for long-term investors. So we're seeing people get very granular about finding targeted opportunities for these lower valuations here.
And they therefore think that the valuation erosion that we've seen in some of these AI names, some of the chip stocks in particular, that they're at the right buying price right now, Jay?
Well, there's certainly at contracted valuations here. And what we've been hearing from clients for a while is, they love the AI story. They see the structural disruption. They see the massive total addressable market of artificial intelligence. It was really just a question of valuations. Was this an area that was a little too hyped, a little too inflated by the markets? Now that you're seeing those prices basically 20% off since the beginning of the year, those concerns are gone. And yes, maybe the landscape looks a little bit different, but if you still zoom out and look 10 years ahead, there's a ton of conviction in artificial intelligence, and at these valuations, it's hard to pass over.
Jay, if the trade conflict goes on indefinitely, is there a corner, a specific area of the technology industry where you do want to boost your exposure?
There is. We actually brought out a strategy a couple of years ago, very focused on this, which is IETC. It's our U.S. tech-focused ETF, and it's specifically looking to remove geopolitics from technology stocks. The tech sector has over 60% of its revenue coming from overseas, very globally integrated supply chains. And if you can really isolate companies that hire, build, and sell in the United States, you can still get that tech exposure, that tech growth, but try to limit
what's in it?
And limit some of the impact of supply chains.
Jay, what's in it? What names are we talking about? What specific technologies, specific supply chains do you want to go into?
Well, if you look at the portfolio today, it's actually underweighting several of the Mag 7 stocks that make up such a top-heavy amount of the tech sector as well as the communication sector. A lot of those stocks are still very globally integrated, have a lot of sales overseas. It's looking more domestically, sometimes at e-commerce companies that do a lot of buying and selling within the United States, some AI-related companies that are doing a lot of buying and selling in the United States. But it's really kind of reweighting the tech sector, and that top 10 looks very different in a fund like IETC than just kind of the broad tech sector.
Jay, how are you currently discussing with those that are allocating towards your funds the long-term versus short-term? How many are wanting to commit at this moment if they are worried about what the next headline seems to be bringing?
It's really about getting granular and taking that long-term view. We have seen a lot of investors, again, are really kind of looking for what's the targeted exposure that they have the highest conviction in over the next 5 to 10 years. And look, you get compensated for taking equity risk, and we're seeing equity risk play out in the markets today. So if you can take that long-term view, get granular on the themes like artificial intelligence that people believe in over the long term, we believe they should be rewarded over time. So, in many ways, it's opportunity hunting, but it's also, behavior and behavioral coaching around being invested and staying invested during turbulent times.
It's important to remind oneself that all of the things we've been spending the last 2 years talking about haven't ended or gone away. The AI infrastructure build out, all of the forecasts are multi-year. I guess for you, when you think about construction and you think about clients, it's your conviction on whether the trajectory we were on in 2024, particularly around AI infrastructure, data center, continues. Do you feel that way?
I don't think there's a major shift here. Tech companies are very good at planning for the long term around these very, very, capital intensive build outs. And so if you're building a data center today, it's because you believe in AI 3 to 5 years from now. And I think what's different about this time around is you have tech companies that are flush with cash, that continue to bring in new cash through free cash flow. And they see a huge potential market in artificial intelligence. So they're excited to invest in this space. They're excited to put their capital work, and they're planning for the future.
You said the word cash 3 times there. Interesting. Data center, memory chips. You guys interested in that market?
We are. So we look at the entire AI technology stack for opportunities. And, you could kind of look at the bottom of that tech stack, starting with what is the real estate that is really hosting the digital infrastructure required for artificial intelligence. On top of that are a lot of the semiconductor companies, not just GPUs, but memory, transceivers. We really like that digital infrastructure area right now because that's where a lot of revenue is being channeled in artificial intelligence for the next couple of years as we see a build out of AI.
Right. Jay Jacobs of BlackRock, really great to have you back on the program. Thank you very much. Now, coming up, former U.S. Treasury Secretary Larry Summers joins us to talk tariffs and why he expects more turbulence. A key conversation coming up here. This is Bloomberg Technology.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episode premieres April 23rd, only on Bloomberg. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Our Bloomberg audiences worldwide. I'm David Weston, and I'm joined now by the former U.S. Treasury Secretary Larry Summers of Harvard. Larry, thank you for being back with us. When we talked just a week ago on Wednesday, the day of the announcement of the tariffs, there was a lot yet to be determined. The markets have been through an amazing amount of volatility since then. 3 down days. They're sharply up today. You've been quite explicitly critical of what President Trump has announced here. Do you feel better today because the markets are coming back?
Sure. I feel better anytime instability seems to be calming, but be not confused. There's only one reason why instability is being reduced, and that is there's a growing hope in markets that a larger part of these policies are going to prove transitory and reversible. This does not reflect any kind of market endorsement of the approach that the president has followed. Rather, it reflects a judgment that the president might recognize the reality that markets are telling him about, that many of his advisors are telling him about, that corporate CEOs across the country are articulating, that this kind of wholesale tariff policy is simply bad for economic performance. We're seeing some signs that the administration may recognize that.
We're seeing signs, but do we have a better sense of the goals and the process today than we got from the Rose Garden last Wednesday?
I don't think so. I think this is fundamentally a improvisational effort. You could tell that when you knew that there was a policy based on tariff reciprocity that didn't use any data on the tariffs of other countries in figuring out how to reciprocate. You could tell that from the blatant contradictions between what Presidential Advisor Navarro was saying and Presidential Advisor Treasury Secretary Scott Bessent was saying. You could tell that from the degree of division between close outside advisor Elon Musk and many members of the president's economic team. This is a policy, it's a hugely consequential policy, but by all appearances, it's being improvised on a daily basis, and that's creating huge uncertainty. But it's only uncertain. There's only uncertainty if things go in both directions. And today happened to be a day when things moved in a positive direction. I hope that the moves to back off these policies can continue. but we'll have to see. I suspect we're going to have volatile markets for some time to come, and no one can know, but my judgment is that I'd be surprised if the bottom is yet in with respect to this phase and markets.
How bad could it get?
Oh, I think the likelihood, I think it's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely in the context of a recession to see markets reach levels significantly below their current levels. So I think we could be looking for fairly serious economic problems, and I think it will cast a shadow forward, because if we have a recession, the budget deficit will go up, the accumulated debt that we have to deal with will go up, there'll be financial distress that will affect higher risk companies and also higher risk countries in the global economy. But David, there's a central thing to understand about this moment of economic and financial difficulty. To borrow a word from the doctors, it is our first iatrogenic recession, our first iatrogenic financial crisis. Iatrogenic illness is when you go into the hospital and you catch an infection there. It's when the people whose job it is to make things better are the active agents of making things worse. And iatrogenic illness, staph infections and the like in hospitals is a major preoccupation for doctors. This is an iatrogenic economic challenge. There is nothing in the outside world that is causing this challenge. It is induced by the words and deeds of President Trump and his administration. The good news about that is it could be resolved with words and deeds of President Trump. If they backed off these policy errors, I think there would be a substantial resumption of normality. But as long as a hospital maintains unsanitary conditions, its patients get infections when they enter. And as long as these policies are being pursued, we're going to see substantial volatility in markets, substantial recession risk, substantial damage to middle-class families.
So just to follow up on that, is there any remedy for the patient other than for the chief doctor, that is President Trump, to back off what you just described as policy errors? Is there anybody else who can save us?
Look, depending on what happens with other countries and how they handle their diplomacy, it may be easier or harder for him to back off these policies. Depending upon how the business community responds, there may be more or less ability to create an environment where there's a backing off of these policies. But there's nothing complicated about this. You impose huge tax increases on households in an uncertainty-creating way that's also damaging to established business patterns, and the economy turns downwards. There's nothing subtle or sophisticated about this. This is introductory economics. It's the kind of question that could have been on an introductory economics exam for decades. Suppose the President of the United States decides suddenly to impose a massive tariff tax increase on products from all over the world, what will happen to the economy? And any B student will know that the answer to that is that it's a supply shock that raises prices and raises unemployment as well, and makes the economy less efficient and adds substantially to uncertainty. This isn't some sophisticated, complicated thing to analyze.
Larry, thank you so much for being back with us. Really appreciate it. That is former U.S. Treasury Secretary Larry Summers of Harvard. Back to you.
We thank you, David Weston. We check back in on these markets on the heels of that interview. The Nasdaq coming off of its highs. We're now just up 2.7%, still the best day since August 2024, after what we'd seen as a couple of days sell-off prior to yesterday, which is the worst in 5 years. We go into the biggest movers from a points perspective. We're thinking about consumers booking high. Mercado Libre, Latin America exposure, Netflix up 3.4%. Coming up, Samsung quarterly profit beat expectations. This as President Trump signals there may be a trade deal with South Korea. We'll get to that next. This is Bloomberg Technology.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Technology shares literally just touching session lows in the last couple of seconds. Nasdaq 100 up now, 2.5%. But we're also seeing some current downward pressure. Bitcoin's been around $78,000 per token over the last 3-4 days. Remember, it traded over the weekend. There is more buoyancy. We are rebounding, but there are many, many more tariff and trade-related headlines to digest. Don't go anywhere, because we'll be right back. This is Bloomberg Technology.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime, and now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. So markets, Caro.
Yeah, let's check in on them because we're coming off of our highs. The Nasdaq 100, though, still clinging to 2.5 percentage point gain. We're seeing very few stocks in the red today as people start to buy this dip and hope that more trade deals might come. South Korea, Japan in the mix. Move on and have a look at some individual chip stocks that I want to shine a light on because deals are actually getting done. Marvell's selling its auto-related part of the business to Infineon, the German company. We're up 6.8% on a $2.5 billion deal. Broadcom buying back its shares. Steep discount after the recent sell-off, 6.7% higher as they say they're going to be purchasing some $10 billion. And Micron, interestingly, reports coming that it is looking to pass on some of those tariff costs to customers. It's up 2.5%. But let's dwell on another chip company. It also makes phones and plenty of other things. Samsung. Shares climbed over in London trading after South Korean tech giant reported better than expected preliminary results for the fiscal first quarter. It also comes, of course, as President Trump said the prospects for a trade deal with Seoul were looking good. Let's dig into it. Peter Elstrom is here with us, still in New York. Let's go to the earnings first. The fundamentals looking good for memory in particular.
Yeah, that's right. So Samsung reports its preliminary earnings right after the quarter closes. We'll get more detail later on, but at least the preliminary numbers were very good. Revenue was up 10%. Their operating profit was $4.4 billion, well ahead of what analysts had anticipated. There are a couple things playing into the results here. First of all, DRAM, the legacy DRAM business is taking off quite a bit, and they have a new Galaxy smartphone out there that's doing quite well at this point. So Samsung, at least at this point, is showing some progress. We know that they are well behind in terms of AI memory chips. They're trying to play catch up with SK Hynix. They didn't give any detail on that today, but we may get it later on in the month.
The memory market's very interesting in how Samsung plays it, right, particularly when it relates to China, because they are catching up, but they are able to currently serve customers in China until the US tightens export restrictions. Just go with that with us, Peter.
Right. Well, the U.S. administrations, first the Biden administration, now the Trump administration, has been quite concerned about some of these chips that are going into China, being sold into China. NVIDIA chips, of course, is sort of the top of the list there, but also the high-end memory chips are a concern for them. So SK Hynix makes the high bandwidth memory chips, the HBM chips that are going into China. They have been affected by this. Samsung could also get affected by this in the future. And the goal of the administration is to try to cut off some of these AI capabilities that China is trying to build. In the meantime, of course, those domestic players are competing and they're trying to gain some ground back. China, Samsung in particular, has been struggling because they do have customers in China they want to be able to sell to. But most importantly for them, they want to get verified by NVIDIA so that they can sell the HBM chips that NVIDIA needs for their AI capabilities.
Bloomberg's Peter Elstrom, thank you very much. Let's get more on how technology investors are reacting to all of the market turbulence. Beth Kindig, lead tech analyst at IO Fund, joins us now. And Beth, really grateful to have you on the show. I enjoy the kind of breadth of your commentary on X, actually. Some of it tariff and markets focused, a lot of it actually the underlying technology. But given the markets that we find ourselves in right now, what's your latest thinking on the technology sector and how you're going to play the uncertainty of a trade war?
Yeah, look, nobody holding stocks right now is comfortable, especially tech investors. Tech will overweight impact from tariffs, whether it's the electronics, the data center equipment. We're talking hundreds of billions in imports every year that could be impacted. Ultimately, though, the market can top on good news and it can bottom on bad news, meaning we're seeing SMH semiconductor ETF up 5% despite the threat of up to 100% or higher tariffs in China. Not confirmed, but you've seen some activity over the weekend in that regard. What that means is we are positioned for a bounce. We think that we're in extreme oversold conditions. If you look at the sentiment reading, retail has almost never been so bearish. It's more retail is more bearish than COVID and more bearish than 2009. What that means is the market is oversold. We are positioned for a bounce, and that bounce may or may not continue onward, meaning we still remain cautious even with positioning for a bounce.
So forgive me, Beth, have we or have we not hit the bottom in tech?
It is not likely we've hit the bottom through all of the damage that was done last week and the damage that we could see this year.
So, Beth, we turn to you when IO Fund has outperformed most benchmarks for the last couple of years, and indeed a lot of the other tech-focused funds. Do you make the most of these valuations, just go very focused on individual names and just withstand the volatility, or do you wait for a better outcome? Do you wait for more clarity from President?
It's a little bit of both. We layered in on Friday and Monday. The reason is it's clear to us probability favors that bounce. That bounce is very important for a tech investor because of the damage that was done. You have to capture that bounce if you're going to compete on an annual basis like my firm. And therefore, capturing that bounce is key. De-risking on a bounce rather than during capitulation is everything to a tech investor. Being very strategic. So de-risking on that bounce is key to the performance this year.
It's interesting, Scott Bessent, of course, Treasury Secretary, has time and time again said this isn't a MAGA problem, this is a MAG 7 problem. The NASDAQ peaked back in February. This is actually about DeepSeek. And to that point, we've seen pressure on chip stocks running into this tariff crisis. We were worried about an AI infrastructure bubble. How much have you been paying credence to that, or was the market getting that wrong too?
It is a MAG 7 problem. We hold very few MAG 7 stocks because of the outsized spending on CapEx. You have to think about, is the schedule for depreciation on servers, is that even accurate? Is it really going to be a 5 to 6 year depreciation schedule? That matters, because if it's not, and it's more brief due to these Blackwell systems coming out, and then Blackwell Ultra, and then Rubin, we can see more effects on the bottom line, meaning they're the customers. That is not typically the way the MAG 7 was constructed. And that piece is important to understand. There's a shift in how big tech was the producer, but now it's the customer.
I saw you say on X the other day that AI needs compute, and when it comes to compute, NVIDIA is the gold standard. So if you don't hold many MAG 7 names, do you hold NVIDIA? How do you see NVIDIA's ability to continue its trajectory in this environment?
NVIDIA is the exception. NVIDIA is the beneficiary from all of this CapEx. Very low China exposure. There's a semiconductor exemption to the tariffs. Of course, there would still be some impact, but by far the safest stock in the market today is NVIDIA.
Currently trading more than 5% higher. Beth Kindig, great to have you on the show, lead tech analyst at the IO Fund. We thank you. Coming up, we're going to speak with Dan Ives of Wedbush Securities. You've heard him cutting the price targets of Tesla and Apple. More on that next. This is Bloomberg Technology.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In case you missed it on the opening trade.
The president is speaking to this part of our population that we know did not benefit from globalization. You know, the IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking. And this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe the past losers will be the winners, and maybe the past winners will be the losers.
Don't miss the opening trade, live every weekday.
The names that move markets are on Bloomberg.
The labor market is holding steady and we're growing. Unemployment is holding steady. The labor demand is growing. We're seeing that in our companies. We're seeing the investments by major companies, tens of billions, hundreds of billions of dollars, where the workforce, the American workforce, is going to grow. If we grow this economy, if we have positive job growth, people will start to keep more of their hard-earned dollars. They'll start to invest. They'll start to save. And I think you'll see those markets respond.
Nobody covers business like Bloomberg.
We have some breaking news for you at the moment, and this time it's not on tariffs, but we understand that hackers have indeed been spying on 100 bank regulators' emails for over a year. Ed, we're going to be delving into the details. I know you've got the story in front of you at the moment, but hackers spying on 100 bank regulators' emails for over a year, just showing the extent to which technology has been lapsing for key overseers here.
Yeah, the Bloomberg report that cites sources basically says that the hackers had access to the deliberations of regulators who are deliberating information about the banks they oversee. Clearly, it's a deep report, 150,000 emails from June 2023 until they were discovered earlier this year. We'll get with the team that broke that story. It seems like a big one that's certain to have repercussions from Bloomberg Tech Newsroom. There's a lot more happening in the world as well. Elon Musk took to X to criticize President Trump's top trade advisor, Pete Navarro, calling him, quote, a moron. This was in response to Navarro's comment that Musk is a car assembler rather than a car manufacturer. That also comes after Elon Musk's younger brother, Kimball Musk, criticized President Trump's tariff strategy, calling them a, quote, structural permanent tax on the American consumer. Bloomberg's Kara Carlson is in Austin, Texas, and has the fortunate job of untangling all of that. I think we should start with the feud between Navarro and Musk. And actually, if you look at the data, third party or Tesla's own, there is support for what Elon Musk is saying, that vehicles built in the United States, source components from the United States, are assembled and manufactured in the United States, sort of nose to tail.
Yeah, definitely. You know, this is something that Tesla's been promoting for a while. They say promotions frequently in the last few months that are, you know, Teslas are American made. They know this is something consumers are looking for as they get concerned about tariffs, and it's something they've been touting. And you know, Elon Musk hasn't directly said anything on Trump's policies, but he has been speaking out against tariffs. He's been saying that Trump's tariffs as well will impact Tesla. You know, they're not completely insulated, even as he acknowledges that Tesla is, in his opinion, more American-made than other cars.
Carl, what we're trying to pass here is
what is happening at an administration and a White House level and who has the ear of President Trump. And on tariffs, it feels as though Elon has not. In fact, he goes as far as to not just call Peter Navarro a moron, but calling him dumber than a sack of bricks. I mean, it feels as though he's pushing against the flow, the trajectory here.
Yeah, over the weekend, Elon Musk did push back on just the concept of tariffs alone. He was saying, he wants more of a free, open trade between Europe and the U.S. He is definitely more pro-free market, and it's something he has said before in the past. And while Tesla was initially seen as kind of an initial winner in the tariffs where it'd be less affected, executives have said there is expected impact from tariffs on Tesla.
Kara Carlson, breaking it down, we thank you. Meanwhile, let's just think about President Trump's tariff uncertainty, changing the minds of some of the biggest bulls on Wall Street. Dan Ives, Wedbush, slashing his Apple and Tesla price targets, writing, "These tariffs are so absurd, scary, uncertain to anyone that has a basic understanding of the global supply chain and the way U.S. tech companies operate and U.S. consumers live their daily lives." Dan Ives joins us now. You also wrote in your Tesla piece that Elon Musk needed to step up. He needed to lead. Is this him leading? Is this him stepping up, pushing back against Peter Navarro?
Look, I mean, it's our view Musk basically needs to leave the government. I mean, because if you look at the brand damage, you just cannot deny it. I mean, I think there's 20% actually permanent brand damage in Europe, 10% at least in the U.S. So when he's pushing back, because look, Musk, he's getting calls from Fremont, from Austin, from what he's hearing in China and Germany. No one's probably more plugged in, along with Nadella and along with Jensen, obviously Cook, than Musk. So he knows tariffs. It's a disaster across the board, and it's our view. It sends the tech industry back a decade if these tariffs actually hit.
And on the other hand, Tesla's more insulated than the others on tariffs, right? So what I tried to distinguish in your note is those forecasts you gave on demand loss. You said 10% globally, but more severe in China and the EU. That's not really a tariffs issue, right? It's a reputational issue of Musk's association with Trump. Just explain your modeling.
Yeah, I mean, Ed, unfortunately, Tesla's become a political symbol around the world, but in a bad way, right? I mean, if any frustration toward Trump, Doge, tariffs, globally, there's one symbol. It's Tesla. And, Musk obviously went into the government, in terms of Doge and everything we've seen. And we've talked about it. It's at least a $100 overhang in the stock. And I think when you look at trying to model it,
गाइस, क्रूड ऑयल में ध्यान रखना, ठीक है। नेचुरल गैस में कोई ट्रेड नहीं बना है, अभी बता दूंगा। क्रूड ऑयल में एक बाइंग का ट्रेड एक्सपेक्टेड है। कमोडिटी फॉलिंग कंटिन्यूअसली, यस। नेचुरल गैस इन फॉरेक्स, नो ब्रेक सपोर्ट। नेचुरल गैस का पता नहीं सर, फॉरेक्स में देखा नहीं मैंने, एमसीएक्स में तो नहीं है। बाकी सिल्वर बताया था, सिल्वर अच्छा खासा गिर गया रेजिस्टेंस एरिया से, जिन्होंने पूछा था सेल किया हुआ था तो अगर 1000 पॉइंट गिर गया, 1000 पॉइंट एग्जैक्ट रेजिस्टेंस एरिया से। इसमें ऊपर देखते हैं ये ऊपर तक जाता है या फिर नहीं, यही ट्रेड लग रहा है बन सकता है, और तो इसमें मुझे ट्रेड बनने की अब चांसेस ही कम लग रहे हैं। नहीं जाएगा कहीं है, कैंडल क्लोजिंग इंपॉर्टेंट हो जाएगी ना। लाइक करते रहो गाइस, रुकना नहीं है लाइक में। Don't forget to like the stream, come on, and subscribe the channel. एक ट्रेड बनने की पॉसिबिलिटी है नेचुरल गैस में, थोड़ा आ जाए और MCX में तो ब्रेकडाउन हो ही गया है नेचुरल गैस कंटिन्यूसली, बट स्टिल एक्सपेक्टेड है कि एक ट्रेड यहाँ पर बनेगा। अभी थोड़ी रिकवरी आए अब नीचे से, हाँ वो भी ठीक है। 45 लाइक सडन लाइक करते रहो गाइस, टाइम है अभी, एक ट्रेड और बन जाएगा। देखो अगर कैंडल अभी तो प्राइस 308 के आसपास चल रहा है, वापस 314 के ऊपर अगर क्लोज करती है इस तरीके से और फिर पुल बैक आएगा, तब यहाँ पर एक बाइंग का प्लान रहेगा। तो वेट करना 314 314 के ऊपर, 314.5 के ऊपर कैंडल क्लोज कर दे, तब एक क्लोज कर देगी मान लो इस तरह से, और फिर पुल बैक आता है यहाँ पर, तो एक बाइंग ट्रेड बन जाएगा। बाकी अगर नेक्स्ट लेवल देखें तो वो सीधा आता है 303 के पास, वहाँ पर भी पॉसिबिलिटी, चलो देखा जाएगा। नहीं आता है तो फिर देखेंगे, फिर नहीं नेक्स्ट 303 के आसपास कहीं प्लान करेंगे। अभी और कोई ट्रेड है नहीं, सेलिंग में बने हो तो प्रॉफिट बुक कर लिया, अगर इनको ट्रेल कर रहे हो तो ट्रेलिंग एसएल लगा लो, लास्ट ट्रेलिंग एसएल 314.5, उसके ऊपर कैंडल क्लोज होती है तो एग्जिट करना चाहिए। ठीक है, ये आया था मार्केट लिक्विडिटी लेने, लिक्विडिटी ली फ्लैश, क्रूड के भी सेम चांसेस हैं।
Got some breaking news crossing the Bloomberg terminal. The Supreme Court has backed President Trump for now in the issue of federal worker firings. It's a case that's being discussed as part of the broader initiative of layoffs and voluntary redundancies, voluntary, that DOGE is undertaking. The wording of the headline is "for now," Caroline, indicating, I think, that it's a temporary judgment and that there's more to come. I'm waiting for the story to hit the terminal as well, but it's one that we're watching closely. There's another big story happening in our world on Bloomberg Technology, and that's private markets. It was supposed to be the year for IPOs among venture capitalists and startups. Instead, President Trump's tariffs have put a pause on any ambitions to go public, with the likes of StubHub and Klarna pulling back on their plans. Bloomberg's Katie Roof joins us, and you summarise the anxiety that's out there, the panic, brilliantly in the piece out overnight. I have to be honest, when I woke up, I got text messages from both sides. Some said paralysis, some said there's some panic happening, but people are moving. Summarise your reporting.
Sure. Other than Trump's strongest supporters, most of Silicon Valley, most VCs we talked to were very upset about this. You know, basically, there's two issues here. It's delaying some much-needed IPOs due to market volatility, and then also could bring higher costs to some of their businesses, depending on the business line. But as you know, there haven't been a lot of IPOs for 3 years, and this was supposed to be that quarter.
LPs getting pretty anxious and leaning on the VCs, Katie. But what about current funding rounds? Are there any areas where, particularly in the AI space, companies are still able to raise?
Sure. And so normally there's a lag effect, you know, from public market volatility to private markets, where it takes a few months for things to trickle down at each stage. But, you know, I think it partly also depends on the sector. Obviously, if there's a direct business impact, if anything, you know, if their revenue could be hit by this, if their costs could go up because of this due to international trade, those things are going to have a tougher time fundraising right now, or at least at the terms that they thought they could get. But, you know, if it's something that's not directly impacted by the tariffs, then, you know, you may see things remain relatively constant from a fundraising perspective, unless there's a broader issue with the markets, although it seems like it's kind of resolved a little bit so far.
Jake Saper, who you quote from Emergence Capital, we're trying to triage and figure out. Katie Roof, thanks so much for that story. Well, let's talk about one area where a company is potentially making moves. Billionaire Michael Novogratz has got his wish. His crypto conglomerate, Galaxy Digital Holdings Limited, has received permission for a direct listing on the Nasdaq Stock Exchange. Finally, his company can trade in the United States as well as in Canada, where we're assuming trading is expected to actually happen pretty shortly, Ed, after a special shareholder meeting on May 9th. The company has said all of this in a press release.
This is the US Justice Department will limit the kinds of cryptocurrency crimes it will investigate and prosecute. We've got a memo. The DOJ said it will focus on cases related to terrorism, drug cartels, victimizing investors and other limited categories. One story we'll continue to track, Caro, throughout the year.
Yeah, all things on crypto news. Crypto show coming up 12 p.m. Eastern time, but that does it for this edition of Bloomberg Technology. Check in on the markets as we continue to rally today. This is Bloomberg Technology.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The names that move markets are on Bloomberg.
U.S. consumers are flexible. We have options. We can produce stuff at home. We have a variety of countries we can import stuff. We can substitute into home production. Whereas countries that sell to the United States are inflexible. They've only got the United States to sell to. There's no alternative. So they're the ones who will bear the burden of these tariffs, which means that there's going to be very limited pass-through into downside economic risk or into higher prices. So I think that a lot of folks have got that wrong.
Nobody covers business like Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
And we are live from Bloomberg's World Headquarters in New York. I'm Shonali Basak alongside Mike Regan. Tim Stenovac is on assignment today. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. And Mike, thanks for joining. It's been an incredible couple of days. You've seen Bitcoin throughout the worst of the market sell-off really hold up above 80,000. We're below that level now, but are you surprised?
A little bit surprised. I mean, if you sort of squint and look at the stock market and Bitcoin charts, they're still basically the same shape. Bitcoin did get a lot of selling done over the weekend, so it almost played catch-up, I think, to the weak stock market at the end of last week there. But it's interesting that it's not really swinging as much as the stock market with all the news going on.
We're going to talk more about how it's been holding up, but today it's been giving back some of the earlier gains. Stocks are pairing some of their rally, and Bitcoin along with it. Risk appetite is fragile, of course, and investors are grappling with President Trump's tariffs that are set to go into effect tonight. We look at how the volatility could impact crypto deals. Plus, Tether explores a new U.S. stablecoin targeting institutional clients as legislation develops in Congress. And here's a look at Bitcoin. Since the tariff announcement, it's been trading in the $70,000 to $80,000 range amid the global volatility. Just as Mike was talking about, it was actually outperforming the NASDAQ 100 until today's surge in stocks. And now they're about even on a normalized level. And of course, they have been correlated. And for more, we are joined by Bitwise CIO Matt Hogan. Matt, are you surprised at all about how Bitcoin has held up? There has been this saying that if you have things that are liquid and you need to give it up, then you would sell. But you did not see liquid selling of Bitcoin as drastically this time around.
I think it's held up exceptionally well. I think Bitcoin bulls should be inspired by the performance, and it's set up to rally significantly if we get a period of stability in the broader equity markets. It's worth remembering the last time we had true economic chaos during the start of COVID, Bitcoin wicked down to $5,000 and even below that. Today, we're talking about $80,000. It's a different asset. It has a broader distribution of institutional ownership. And again, I think what it's telling you is once this market volatility stabilizes, we're going to see it return to new all-time highs and then beyond. It's really a display of strength from my perspective.
I want to jump off of the spot Bitcoin market and talk about options market, because in the middle of all this, at the start of April, you launched a covered call strategy over at Bitwise. How does this work, and what's the adoption been like?
Yeah, we're really pleased by the reception we've had for these strategies. They write covered calls on leading crypto equities like MicroStrategy or Marathon or Coinbase. The idea is that the defining feature of crypto, one of its defining features is volatility. And how do you translate volatility into an asset? Well, you write calls against volatile positions and you can generate really substantial income. So we've seen strong trading, particularly in the MicroStrategy product, IMIST. I think it's going to have a broad reception from investors who want to have exposure to crypto, but also generate significant yields and significant income over time.
You know, Matt, obviously it seems like ideal regulatory conditions to launch a crypto exchange-traded product, given the complete 180 in sort of the government's take on crypto since Trump was elected. Though, I wonder, though, what you're thinking about the demand for all these products. Are we in danger of sort of reaching saturation as far as how much investor demand there is for crypto exchange-traded products?
Well, you know, the ETF industry is famous for throwing spaghetti against the wall and seeing what sticks. That's happened in every asset class, and it's happening in crypto. I think there is diminishing return to these smaller and smaller assets that you get one-off exposure through to an ETF. But I actually think the largest crypto equity or the largest crypto ETF hasn't even launched yet. I think the killer app in crypto is going to be a diversified index-based exposure. I think that could be as big or maybe even over the long term bigger than Bitcoin only. But certainly, I think that market is still wide open, still to come. Bitwise hopes to play in that space. And I think we'll see many ETFs succeed, some ETFs fail. But I think there are a number of very large crypto ETFs that still haven't launched yet.
Well, Matt, tell me how you're thinking about that sort of broad exposure ETF. I mean, obviously, Bitcoin is the big monster of the crypto market. Would it be a market cap weighted thing or more of an equal weighted type of thing? How are you thinking about how that exposure will look like in an ETF wrapper?
Yeah, I think it has to be market cap weighted. Here's the bet that most people I speak with want to make. And I speak to financial advisors and family offices and institutions. The thing they have the most confidence in all of crypto isn't this layer one versus that layer one or DeFi versus DePIN. It's that crypto will be more important in the future than it is today. This is like backpedaling 20 years ago and making a broad-based bet on internet search rather than trying to choose between Yahoo or Ask Jeeves or Google. Why not get the broad trend right so that you have that exposure if what you predict long-term happens, which is that crypto, as an industry, 10x's over the next 5 years. That's the thesis I have the most confidence in. If that's what you want to express, you want to do it in a diversified index fund. We've been running the world's largest market cap weighted crypto index fund since 2017, the Bitwise 10. It's over $1 billion today. It's served that purpose for many investors. But I think an ETF that provides that exposure, that gives an easy button for investing in crypto, is going to be a huge win for investors and a huge success in the market.
Matt, Bitcoin might be volatile, but lately so have currency markets been volatile. You have traders betting on insane FX volatility on the heels of these tariff wars. If you think about what's to come ahead, a lot of uncertainty on who will win and how currencies will behave in those situations. What role does cryptocurrency play in a world where these currencies across the world are becoming more volatile?
I love that question. I think the answer to who wins in this currency war is Bitcoin, right? When I watched all the tariff confusion play out and what will Trump do and what will China do and how many bilateral deals will we negotiate, the thing that's clearest to me from all that is that we should expect the US dollar to move lower, that we're moving from a world of the US dollar being the sole reserve currency to a world with potentially multiple reserve currencies. Bitcoin benefits when fiat currencies go lower. Bitcoin benefits when there's new space for reserve assets. I think it's the cleanest investment response to the chaos and confusion we're seeing from this tariffs, specifically because it's the hedge against fiat currency debasement. And I think we're setting up for that in the US, in China, in Europe, and around the world. And I think investors would be foolish not to have at least some exposure to Bitcoin to hedge themselves from the chaos that's dominating the headlines right now.
Matt, to bring it back to Trump, it's hard not to notice that Bitcoin did reach that peak right on Inauguration Day. I'm curious what you make of that. Was it a sell the news type of thing, or is there sort of disappointment in the market about Trump not being sort of as friendly and the U.S. regulatory environment, whatever the case may be, not being as sort of enticing and welcoming to crypto as people had hoped?
Look, I think crypto's done just fine. If you measure from the day of the election until today. Bitcoin has vastly outperformed gold, it's outperformed stocks, it's outperformed bonds. It's been a phenomenal investment. I think it's just the canary in the market coal mine. It's been leading the market. So it ran up significantly between the election and inauguration day, pricing in a lot of good news. We got some of that good news, but we also got some volatility, so it paired off a little bit. But when you step back and look at this from a 30,000 foot level, a number of things remain true. Institutions are still woefully underexposed to crypto. They're going to be coming into the market. The government now owns Bitcoin, has removed a huge amount of regulatory risk. I think it's the best risk-adjusted moment to buy Bitcoin that I've seen in the market. So, has it pulled back a little bit? Yes. But if we span out and measure since Trump won the election, it's done exceptionally well. And I think its best years are ahead of it.
Matt, we thank you for joining us today. That is Bitwise's Matt Hogan, of course, in the middle of all of this volatility. Remember, deals are actually still happening in crypto, despite what we're seeing. For example, just today, Ripple announced an acquisition of prime brokerage Hidden Road for $1.25 billion. Bloomberg's Bailey Lipschultz covers deals, and he covered Circle last week, who had filed for an IPO before the tariff announcement. Circle's numbers were stunning to a lot of people, but in the commercial break, you made a great point to me about how if you see a recession and if you see yields just plunge, then that's going to really impact the type of income you're seeing from a product like Circle stablecoins. Can they make it out to public markets anytime soon?
They certainly want to. And so when you mentioned they did file publicly right before the tariff announcement last Tuesday. So in theory, they could meet with investors right around the Easter holiday and price an IPO shortly after that. The big question is, A, what's your valuation? This is a company we've been keeping an eye on. When they try to go public via SPAC, valued at $9 billion. That doesn't seem to be the case in this current market. And really, when you look at what it takes to bring in institutional investors, the big question is, if markets are going to continue to be volatile, do you want to allocate resources to a company that, as you made the point, if yields are lower, that impacts the fundamental business. And obviously, Trump is pro-crypto, but what does that actually mean for this company?
And we will see some stablecoin legislation soon. But back to the Ripple deal as well. Speaking of stablecoin companies, this deal to buy Hidden Road, $1.25 billion. What did you make of that?
Well, it's a big deal in the crypto world. That's Ripple's biggest acquisition. I think it's one of the biggest crypto acquisitions in history. And it really speaks, I think, to that idea of a prime brokerage in the crypto world. I don't think people really realize that they are in play in crypto, especially since FTX. There's been a lot of demand for sort of a trusted party to stand in between the wild ecosystem of crypto and your own accounts. And Hidden Road, it has a pretty good pedigree. Mark Ashe used to work for Steve Cohen at SEC Capital and Point72. So a pretty fascinating deal. And to me, one of the really interesting elements of it is Ripple really seems to want to use this deal to broaden adoption of their own stablecoin. They're going to encourage the use of their stablecoin on Hidden Road as collateral and whatnot. So a lot of the stories in crypto these days sort of circle back to that stablecoin idea.
It's like an on-ramp, off-ramp for the hedge fund industry in a lot of ways into crypto assets. Speaking of hedge fund managers in crypto, Galaxy potentially listing on NASDAQ. I feel like this has been a years in the making type of move.
It has, and especially with the Biden administration being so, at least from crypto advocates, so anti-crypto, this is really unsurprising, similar to Circle finally flipping public that they can make a listing here in New York on the NASDAQ. We are seeing Galaxy Digital shares. They do trade in Canada, up 15%. Guys, biggest day in terms of a gain for the company since right after the election. So a big move. We have seen outside of crypto investors piling into stocks like CRH that are redomiciling and shifting their exchanges, the exchange home to the U.S. So maybe people getting ahead of their skis. But I don't know, Mike, if the long-term vision kind of aligns in your view.
I think Mike picked the right day to change that listing. If he had done it before yesterday's session or the Friday session, it might have been a different story. But
just incredible.
Fired the news into a risk-on market, so good timing.
Yeah, and the last 2 years in a row in Canada, it was up 173% in 2023, another 122% last year, and of course, the idea of NASDAQ could give it more liquidity. Bailey Lipschultz, we thank you so very much for your time covering all those deals in the crypto world. And coming up next, we're going to going to discuss the tariff impact on crypto deal making and regulation with Pantera's Katrina Paglia. This is Bloomberg.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
In case you missed it, on the Pulse.
You know, it's not the headline-grabbing $15 billion bankruptcy. It's not Lehman Brothers. It's not that. But what is happening underneath the surface is just frantic activity. There's a moment in time when real estate gets really interesting.
Now or soon?
Now. It's here.
Don't miss the Pulse, live every weekday.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Our financial system in this country is antiquated. Our financial system in this country has been punitive to so many different people. And so we're reinventing the financial system. I'm all in personally. I really, truly believe in this with every part of my heart and soul.
That was Eric Trump on the show last week, speaking after forming All-American Bitcoin, a mining firm, of course, with Hut 8. We're going to discuss crypto and deal making and regulation with Katrina Paglia. She's Chief Legal Officer at Pantera. Of course, one of the larger investors in the space, have been doing it a long time. And what's interesting is you guys have focused on Bitcoin, but also very much outside of that as well. When you look at what's been possible so far under the Trump administration, it's been very clear that the stance taken by the prior SEC is no longer. However, you did not see that much movement otherwise yet. And you can see it in the price of Bitcoin, how much it's fallen since November 5th, or, you know, it's marginally higher at this point compared to where it was. What do you want to see?
I mean, I think we have these macro headwinds happening right now, right? Like the tariffs are what they are. There's no way that the crypto industry isn't going to respond in some correlation to what we're seeing with traditional equities. But I think the important thing to focus on is the pullback on Bitcoin in particular was significantly less than what we saw for the equities over the last several trading days. And to me, that indicates, one, the support for the industry is still there. And two, it might start being a little asynchronous in terms of how we view it versus traditional equities. I mean, crypto is borderless. So when you think about the impacts of tariffs, there's not going to be the most material impact, but obviously we're going to follow the kind of the headwinds with the market. But you see this disconnect kind of starting, and I think that's positive in terms of the buy-in and the overall global acceptance and the other alternative things that you can do with this asset class.
You know, Katrina, I'm curious if you're legal officer, so to put your lawyer hat on and think about this dramatic 180 in policy we've seen already so early in the Trump administration. And I'm sure in many ways it makes your job easier to some degree. But I'm also wondering if it makes it different and difficult in other ways. You know, I'm thinking about the story today from the Justice Department, basically scaling back what it does when it comes to crypto crimes and what it considers to be, in their wheelhouse for crypto crimes. In a way, does that make it, tougher for firms like Pantera to sort of have to police the industry themselves, to do the more due diligence and not have the government sort of on the case as much?
That's a really interesting question. So to your point, there has been a significant change in policy from the administration since January 20th, right? Like all these cases continue to be dropped. Changes in terms of staffing at the SEC, the DOJ, to your point, terminated its crypto task force this morning with a pretty aggressively worded memo, actually kind of criticizing the prior administration. To answer your question, no, I don't think it makes anything significantly more difficult in terms of policing. I think that the agencies are still there, the frameworks are still there, the enforcement divisions are still there. I think what we've seen is a pullback on the crypto-specific regulation by enforcement of the prior administration, and I don't think that's a bad thing. I think that's going to foster innovation, and that's going to allow us to build the right rulemaking framework with the right partners at the table going forward.
I remember the last Trump administration, Jay Clayton was at the table at the SEC, and he cracked down on a bunch of things. That was the ICO boom. Does everybody remember that? I kind of worry about this again in terms of the amount of meme coins, the amount of tokens that we're seeing, and the willingness of exchanges to loosen their standards. Does that worry you outside of the realm of the tokens that you see as investable?
No, I think that the American public is going to kind of figure out what the meme coin situation is. I don't know that we necessarily are overly focused on it. There's always going to be something that comes out that's got a little bit of hype on it, that's got a little bit of attention. But overall, the broader blockchain and crypto industry is a real asset class, and it is subject to regulation by various agencies, right? You have the SEC, the CFTC potentially coming into play here, and then obviously the DOJ and the other criminal agencies are not going anywhere. So, I expect there to just be continued institutional buy-in and adoption, and that will just further sophisticate our asset class.
Katrina, we have to leave it there. We thank you so much for joining us here on set. We didn't even get to stablecoins. Of course, that's a big one, but of course, we will keep keeping our eye on that. That is Katrina Paglia of Pantera. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episode premieres April 23rd, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Stablecoin issuer Tether Holdings is considering launching a U.S.-based token aimed at institutional clients, and it would likely target faster payment times between banks. This comes as President Trump has gotten behind a stablecoin bill, which is now progressing through Congress. We're going to now bring in Anna Yuan, founder of stablecoin platform Perena. You know, actually, the bigger question I have is less about regulation and more about the macro. This whole idea that if you saw a recession in the United States, then you would see a big drop-off in yields that would impact the demand for stablecoins as well. How are you thinking about that dynamic?
Thanks for having me back, first of all. I think the macro dynamics are complicated, very nuanced. So on one hand, if we're seeing tariffs continue to impact manufacturing and the economy to increase friction in trade in emerging markets, I believe we're going to see people and businesses flock into dollars. So it'll actually increase the demand of dollars. And when you mentioned Tether, they're already a significant holder of short-term U.S. Treasury bills, and this trend will continue to increase. On the other hand, while there are talks of interest rates coming down, if inflation continues to stay high due to tariffs, we might enter into a phase of stagflation. But either or, I think the dollar's dominance and continued importance in global trade with or without tariffs will continue to increase.
You know, Anna, obviously Tether has just made boatloads of money just parking those reserves in treasuries, and it really seems to be drawing in a lot of competition. A lot of traditional firms, you know, like PayPal has their own stablecoin. A lot of traditional and crypto firms are thinking about launching their own. Even this Hidden Road deal today, Ripple buying Hidden Road, it seems like a big part of that motivation is to broaden adoption of Ripple's stablecoin. So I'm wondering where you see that all going. I mean, is there room for all these stablecoin ambitions in the market, or are we likely to see sort of the field shrink down to a few major players?
No, I think it would be a lot of stablecoin players in the market, and this trend will continue to increase. In fact, that's the thesis that Perena is built on top of. So with the stablecoin bill passing, or most likely to be passing, we'll see a number of otherwise very prominent and established, likely risk-averse U.S. financial institutions, starting with PayPal, but also likely banks and other types of FIs coming in to either issue their own stablecoin or do what Global Dollar, which is one of the consortium-like stablecoin issuance. So we'll see at least a couple, in my opinion, at least a couple dozen notable stablecoin issuance.
Right. Anna, we only have about 30 seconds left here, but if you had to point our viewers to the most interesting potential stablecoin use, what would it be?
Financial transactions, payments, and the combination of payments and financing.
Anna, that is a really fascinating set of circumstances to be walking into. That is Perena's Anna Yuan. You know, it's interesting, Mike, because one thing I look to is how Robinhood has been using stablecoins to facilitate 24-hour trading, for example. They think that this is going to become commonplace. Yeah, and there's a lot of talk about sort of cross-border payments. You know, instead of taking days to send a payment to another country, you can do it instantly. So there's a lot of potential there for sure. I also think what you were saying before about that on-ramp, off-ramp between hedge funds and the traditional crypto and markets and stock markets could be interesting. Before we let you go, guys, I want you to check on markets here. Of course, we're seeing a rebound after that 3-day decline that has been pretty brutal. We are off of session highs for the S&P 500, but still up 1.5% nonetheless. We're seeing that risk appetite pour back into broader markets. Maybe not as much for crypto today, but of course it has held up. That's all for Bloomberg Crypto. Big thank you to Mike Regan for joining. Join us same time, same place.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When when you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
In case you missed it on the opening trade.
The president is speaking to this part of our population that we know did not benefit from globalization. You know, the IMF has been talking about those left behind for decades, and we haven't really seen anything to speak to that part of the population. That's who President Trump is speaking to. But we in Europe, we're seeing the same thing. We're just a few years behind. That part of the population who were left behind are voting, they're speaking. And this is going to unpick a lot of the fabric of the economy that we have seen for the last 20 years. So for me as an investor, it's really thinking about, right, if we had 20 years of globalization that created winners and losers, who were they? And if this is going into reverse, maybe the past losers will be the winners, and maybe the past winners will be the losers.
Don't miss the opening trade, live every weekday.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome to Bloomberg Markets. I'm Scarlett Fu. What started off as Turnaround Tuesday has lost some steam. Take a look at the S&P 500, up 1.9%, but actually at the lowest point of the session. Within the tech names, all Mag 7 names are higher, gaining 1.9% at the moment. We'll continue to keep an eye on whether they hold on to those advances. The VIX has backed off. Yesterday it reached as high as 60, currently just below 42, so that's off 5 points from yesterday's close. And we can see yields are higher. The two-year yield moving up by 1 basis point to 3.77%. We're going to see how much demand there is for U.S. Treasuries in the next 30 minutes when the government auctions off $58 billion of 3-year notes. And later on this week, of course, there's going to be an auction of 10-year and 30-year bonds as well. In the meantime, let's return to equities and check in on a couple of individual movers. And for that, we go now to Bloomberg's Emily Grafeo.
Well, Scarlett, just like the indexes, NVIDIA is also moving higher after that market rout. Earlier in the week, the stock was down over 7% on Friday, but actually ended the day yesterday in the green, and it's extending those gains today up about 4% right now, really demonstrating that the hardest hit areas of the market are the ones rallying the most today. Who knows if that's going to hold as we continue on to the week. Check out shares of Levi Strauss, though, because this stock has been moving around all day. It was up as much as 16%. Now it's lower by quite a bit now, almost 5%. What had happened was the company projected growth, and they seemed to shrug off the impact of tariffs in their earnings results. They said that their full-year guidance was going to be maintained and that it assumes no significant worsening of macro pressure on consumers, supply chain disruptions, increased tariffs, or similar factors. That seemed to be something that the shareholders liked earlier in the day, but it wasn't enough to keep those gains going. Stifel, though, they have a buy on this stock. They said that Levi's isn't immune to cost shocks or the consumer slowdown, but the company's globally diversified revenue and supply chains are advantages in offsetting those tariff impacts. And then finally, healthcare companies getting a boost today. Specifically, I'm watching United Healthcare, that stock up about 6% right now. This is all coming after the U.S. government increased 2026 payments for Medicare Advantage plans. Those plans will see payments increase by an average of 5.06%, which was double the rate
that the government proposed in January. So a big boost for those health insurance companies today, Scarlett.
All right, thank you so much, Emily Gorfeo, with our movers. Now, of course, the word of the day, you could even say the word of the last few days, is volatility. U.S. markets opened higher today, but it's been a fairly bumpy trading session. Last hour, the former U.S. Treasury Secretary Larry Summers told Bloomberg that he thinks this can go on for a while. He also said a recession now is more likely than not.
If they backed off these policy errors, I think there would be a substantial resumption of normality. But as long as a hospital maintains unsanitary conditions, its patients get infections when they enter. And as long as these policies are being pursued, we're going to see substantial volatility in markets.
All right, for more on the action in markets, let's bring in now Lisa Shallett. She is Chief Investment Officer for Wealth Management over at Morgan Stanley. Lisa, always a pleasure to speak with you. In your note, you make the point that you need to know the end game in order to make a call or have a view on earnings or the economy. Problem is, nobody knows the end game. So how much do you read into today's market rebound, for instance?
Not much. I mean, I think yesterday, we were spending most of the day, reviewing inputs from our desk, watching for signs of capitulation. And one of the things that's quite interesting is while it seems like we got some capitulation, some deleveraging, quote unquote, degrossing by the institutional community, by the hedge fund communities, what's been, quite surprising, I think, to us is that private clients and some of our investors have continued to be buy the dip investors. And so while we certainly got to oversold conditions yesterday, we don't think that we're at a point of capitulation or a point where the Larry Summers scenario of an actual recession, which is a non-zero possibility, gets discounted. We think that that point would come where, markets and the S&P 500 could fall as much as to 4,600. Now, we're not making that call right here, but we do think that your point at the top of this block, that volatility is here to stay, is the right one. And I don't know that today's move has a lot of legs underneath it other than people just trading the book on oversold conditions.
So, Lisa, how do you think about a Trump put or a Fed put? Nobody knows anything when it comes to policy, but is there a pain point at which you would expect or you might expect or you could reasonably expect some kind of intervention?
So, look, I think that's one of the issues that investors have had to grapple with is that, unfortunately, as 2025 has rolled out, both the Fed put and the fiscal or Trump put has been removed. The Fed has been making clear, really since their first meeting in January, that they are focused on the data, they're focused on patience, they don't see urgency, and they want to be mindful and watchful for inflation. And obviously, this tariff data makes their job that much harder. Points that Chair Powell emphasized on Friday. I think that the Trump administration in their various, communiques over the weekend through their various cabinet member ambassadors have all made it clear this ain't over quickly. And while, Bessent, I think, is trying to talk about negotiation, you have folks like Peter Navarro really digging in and saying, no, this is a strategic repositioning of global trade policy for the rest of time, and this is where we are, and nothing's changing. So I think that suggests that it would take a lot more pain for the American people, meaning unemployment, and not just, stock market pain, for Trump to rethink the direction of travel.
So a lot of concern here with how policy is unfolding and, how the administration moves next is that these policies could undermine foreign demand for U.S. assets, particularly U.S. treasuries.
The Treasury market, the U.S. dollar are no longer the risk-free instruments that people had always assumed that they would be. You look at the 30-year yield yesterday jumping 23 basis points by the close, the biggest one-day increase since March of 2020. Lisa, do we have a sense of whether this was forced selling, foreign buyers dumping U.S. assets in favor of more attractive, assets in, say, Japan or Germany?
I don't know that I would say it was forced selling. I do think that globally, currency traders, global investors are rebalancing portfolios, and they're rebalancing portfolios not just because, to your point, that is there uncertainty, but I do think for the first time in 80 years, there are threads of mistrust. There are threads that, hey, we thought we had allies, we thought we had deals, we thought we had global forums like the World Trade Organization to deal with, perceived inequities and to litigate and discuss those things. That's a game over. I think that the events, even this morning, with the administration kind of rebuffing European gestures to want to negotiate, I think we're really, really, really playing hardball with a lot of regions that can very easily reposition some of their foreign.
News when you want it with Bloomberg News Now. I'm Amy Morris. Global stocks are rebounding as signs of calm return to Wall Street following the biggest three-day plunge since 2020. We check markets for you all day long here at Bloomberg. The S&P 500 is up 2.75%. NASDAQ is up 3%. The Dow is up 2.75%. The 10-year Treasury yield at 4.2% and the 2-year yield at 3.79%. Now, this is more than just buying the dip. Comments about potential trade deals sparked the relief rally. Testifying before the Senate Finance Committee, Jamison Greer, the U.S. Trade Representative, stressed that negotiations are the goal. Ranking Democrat Ron Wyden asked about that.
Will higher tariffs go into effect tomorrow?
Yes, they're scheduled to go into effect. We are having negotiations with all kinds of countries at this time. What we've told them is if you have a better idea to achieve reciprocity and to get our trade deficit down, we want to talk to you. We want to negotiate with you.
Greer added that President Trump will not provide outright exemptions for any of his new global tariffs. And President Trump says prospects for a trade deal with South Korea are, quote, looking good after a phone conversation with acting South Korean President Han Duck-soo. And the president posted on social media, South Korea is sending a team to the U.S. to continue those talks. China has pledged to retaliate against Trump's latest tariff threat, raising the risk of a prolonged trade war. Treasury Secretary Scott Bessent says China's decision to escalate by raising tariffs on the U.S. is a big mistake.
We are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us.
Treasury Secretary Scott Bessent on CNBC. Former Treasury Secretary and Wall Street Week contributor Lawrence Summers tells Bloomberg we have not seen the end yet.
I suspect we're going to have volatile markets for some time to come, and no one can know, but my judgment is that I'd be surprised if the bottom is yet in with respect to this phase and markets.
Bloomberg contributor Larry Summers speaking with Wall Street Week host David Weston. UK Prime Minister Keir Starmer, appearing before the UK Liaison Committee, told MPs that Trump's tariffs are very challenging.
I'm obviously very disappointed to see tariffs in place. I don't think they are good for our economy or for economies around the world. My instinct is that we shouldn't jump in with both feet to retaliate. So in that sense, I'm not changing my plans. I think calm, collected response. Obviously, we have to keep our options on the table.
Starmer pledged a commitment to steel production in the UK and said the UK should talk with other countries about lowering trade barriers between them. UK Prime Minister Keir Starmer says he does not think the tariffs is a passing phase. He called this a changing world order. White House divisions over tariffs are spilling out into the open. In a series of social media posts, Tesla CEO and Doge figurehead Elon Musk blasted White House trade advisor as, quote, dumber than a sack of bricks and truly a moron. That's after Navarro told CNBC Musk is a car assembler who benefits from cheap foreign-made parts. We get more on this with Bloomberg technology host Ed Ludlow.
There is certainly a rift between Elon Musk and others around Donald Trump on the issue of tariffs, right? There were reports over the weekend that Musk had made a direct appeal to Trump in the hours that preceded the news of Monday and the markets of Monday to rethink the tariff stance.
Bloomberg's Ed Ludlow reporting. In world news, Ukrainian troops captured 2 Chinese citizens fighting for Russia in the Donetsk region. President Volodymyr Zelensky instructed the Ukrainian foreign minister to reach out to his counterpart in Beijing about the incident, which he says puts into question China's declared stance for peace. The Supreme Court has blocked a judge's order to reinstate 16,000 federal workers in 6 government departments, granting President Trump's request. The decision allows the administration to fire employees who are not covered by a similar order in Maryland, where workers in 19 states and the District of Columbia must be kept on paid administrative leave. Justices Sonia Sotomayor and Ketanji Brown Jackson dissented. Under the Trump administration, the Justice Department will limit cryptocurrency crime investigations, now focusing only on cases related to terrorism, drug cartels, victimizing investors, and other very specific categories. The National Cryptocurrency Enforcement Team has been disbanded, and any existing investigations that don't align with the administration's priorities will be closed. That's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Investors should take advantage of new emerging technologies to access new markets, build new businesses, and invest in different asset classes.
We're really excited about robotics, and Chinese companies are looking so compelling, it's time to revisit them.
Market. What actually happened here? Why the volatility in Levi specifically?
Yeah, so we spoke to analysts who couldn't point to anything specific with Levi's, but said that there's just overall volatility in the space and especially in the specialty apparel business. So it might have just been a symptom of what's been going on in the market more broadly.
Let's go to that full year outlook, because they maintained the full year outlook, but they excluded the impact of recent tariffs. I mean, which I guess is not that surprising at the end of the day, because they don't know anything about what's going to happen. What were investors looking for, though? They actually wanted some color on this?
Yeah, I mean, it seemed like investors were pretty happy with what Levi's did because of the stock rally. You know, they said, look, we found out this news 5 days before, and it was too soon to include it. And for other reasons, they kept their outlook the same.
Nevertheless, we saw JP Morgan upgrading the stock following the latest results, in part because of the CEO Michelle Gass's strategy that expands Levi's total addressable market. What is that? Can you explain what it is?
Yeah, absolutely. So Levi's traditionally has been both direct-to-consumer and wholesale, and so they're prioritizing direct-to-consumer now. So they really want to grow their own stores and their own business, and they're also focusing on women and providing items that aren't just jeans. So you can go to Levi to buy your top or other accessories or things like that.
Okay, things are within their control, because certainly tariffs are not. Lily, always appreciate it. Thank you so much. Bloomberg's Lily Meyer. Now, another company that has given up its advance is Apple. As we mentioned, the stock now lower, extending its 3-day 19% plunge. And of course, customers are rushing to buy iPhones and watching to see how Apple navigates tariffs. Let's take a look now at the stock. It is down about 0.5%. Let's turn to Bloomberg's Ryan Vlastelica for more. So, Ryan, Apple's best-selling and most important product is the iPhone, and it's made in China. So more than any other company, Apple needs clarity on tariffs and needs a deal on tariffs in China. But so far, there's no movement on that whatsoever. So it's really become a proxy for China-U.S. trade talks in a way.
Yeah, absolutely. There's still so much uncertainty about how Apple is going to navigate the tariff situation, whether that is raising prices, whether that is absorbing these costs, all of which would have, detrimental sort of implications for its margins or demand and sales growth and so forth. There's also a possibility that they get an exemption as they did during the first Trump term. So there's so much uncertainty here, and that's why we're seeing the stock really become the poster child for tariff-related uncertainty and risk.
Yeah, especially after Trump has threatened to add another 50% tariffs on China after China retaliated with its own. Now, we know that Apple has spent years trying to shift more production to other Asian countries, Vietnam and now India. That idea is still not helping the stock all that much because those countries also face tariffs.
That's right, absolutely. And the idea that they're going to bring manufacturing back here, any kind of changes to its supply chain, it's going to take a long time. It's going to be very costly for them. So the idea that you can have some kind of quick solution to this is, I think, a little bit, out of the realm of possibility.
Right. And just to clarify here, we are hearing from the White House that the 104% levy on China imports into the U.S. begins tomorrow. And of course, we knew that April 9th would be the starting date for those tariffs. Let's talk a little bit here about the rush to buy iPhones, because the assumption was that Apple will need to raise prices once the tariffs take effect, and consumers are rushing to get there. I mean, is that a given that Apple's going to raise prices?
Well, we just don't know what they're going to do at this point. They might have to raise prices. They might just absorb some of the costs and take a hit to their margins or earnings. Right now, it's all very unclear. But certainly a lot of people I speak to expect some sort of combination of the both. Maybe they'll raise prices where they can, maybe on the higher end models. Maybe they will just have to absorb some of this. I mean, they are still viewed as a very high quality company in terms of their cash flow.
Okay, guys, natural gas का ध्यान रखना है. लास्ट ट्रेड है, सपोर्ट है, ये पूरा ही सपोर्ट जो है हो सकता है इसे बाइंग आए, हो सकता है थोड़ा सा और डीप जाए और बाइंग आए. दोनों ही लेवल ठीक है. यहाँ पर एक छोटा सा बाइंग का ट्रेड. देखते हैं कितना मोमेंटम आता है. 1-1.5 घंटा और है बस मार्केट के पास, जितना मूव करे तब तक. बाकी और अभी फिलहाल के लिए कोई लेवल नहीं है. ये एक लेवल है हमारे पास. बाकी नेचुरल गैस अगर यहाँ नहीं रुकता है तो फिर सीधा 294 ही आएगा. लाइक भी करते रहना गाइस, भूलना मत लाइक भी करना है. नेचुरल सेलर्स अगर निकलना चाहें तो निकल जाएंगे. जो लोग ट्रेल कर रहे हैं अपने ट्रेलिंग एसएल के साथ भी निकल जाओ. ओवरनाइट मत रखना, कल का कल देखेंगे. बना लो, बट ध्यान रखना मार्केट भी क्लोज होने वाला है तो ज़्यादा बड़ी पोजीशन मत बनाना. एसएल देख लो 4 पॉइंट का है फ्यूचर में. लेट एंट्री मत करना. हाँ, डोंट डू द लेट एंट्री. बाकी क्रूड ऑयल भी देखोगे तो सपोर्ट पर ही है, बट यहाँ पर प्राइस ना, ये मैंने लगाया तो है बट ये ऐसा नहीं कि पहली बार आ रहा है. 1 2 3 4 बार यहाँ सपोर्ट ले चुका है. ये 5th टाइम आएगा यहाँ पर. तो अब थोड़ा तो ये रिस्की हो ही जाएगा. ऐसा नहीं है कि बिल्कुल भी रिस्की नहीं होगा. यहीं आ जाए नीचे तो बेटर ही है मेरे अकॉर्डिंग। बाकी होने को बाइंग यहाँ पर भी कर सकते हैं, बट ये मल्टीपल टाइम टेस्ट है तो थोड़ा सा रिस्क लग रहा है क्रूड में बाइंग में यहाँ पर। ऐसा नहीं बाइंग आ नहीं सकती, बट मल्टीपल टाइम टेस्ट है। पर अवॉइड ही करते हैं बिकॉज ऊपर भी रेजिस्टेंस है, फिर ये बीच में ना रुक ही जाएगा मुझे लग रहा है यहाँ पर। इसको रिमूव भी कर देते हैं, खाली में ले लेंगे प्रॉब्लम हो जाएगी। बाकी हो तो गया साइडवेज, अब देखते हैं किस साइड मूव करता है। एक ट्रेड ये प्लान कर लेते हैं सेलिंग का इन क्रूड ऑयल। हाँ, थोड़ा सा पुल बैक देता है तो एक सेलिंग का प्लान यहाँ से ही कर लो। नीचे तक आना चाहिए इसको अब। ठीक है, यहाँ पर होने को बाइंग कर सकते थे बट नहीं कर रहे हैं बिकॉज एस एल सॉरी मल्टीपल टाइम टेस्ट लेवल है तो ठीक नहीं लग रहा है। हल्का सा पुल बैक दे क्रूड ऑयल तो एक सेलिंग का बना देना। वैसे फिलहाल के लिए क्रूड ऑयल साइडवेज ही है इस रेंज के अंदर, कहीं ना कहीं तो रेंज ब्रेक जरूर करेगा। रेंज में फंसता है ना मार्केट, बहुत बुरा फंस जाता है बिल्कुल। एसएल काफ़ी बड़ा है तो फिर अवॉइड कर सकते हो। एसएल उतना ही बनेगा, उससे छोटा एसएल है नहीं। एटलीस्ट इतना तो लेना ही पड़ेगा। If the SL is big in natural gas, if you think you can't take it, 5.4 point sorry, avoid it. Okay. बट इतना रखना ही पड़ेगा, इससे कम नहीं रख सकते क्योंकि अगर इससे कम रखेंगे तो अननेसेसरी रिस्क है उसमें फिर हिट होने का। या तो क्वांटिटी कम रख सकते हो, नहीं तो अगर बड़ा लग रहा है तो फिर बिल्कुल अवॉइड ही करना। पुल बैक में अगर ये थोड़ा नीचे आ जाए पुल बैक में वापस सेल कर सकते हैं क्रूड में बाकी एग्जैक्टली नीचे आ गया तो बाइंग ही कर लेंगे
Opportunity is really huge.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's the Tuesday edition as we count down to reciprocal tariffs taking effect at midnight and China pledging to fight to the end. Wouldn't know by watching Wall Street, though. I'm Joe Matthew alongside Kaylee Lyons in Washington with a relief rally underway. Kaylee, hopes for deals to be announced by the White House, but nothing really has changed yet.
Well, no, certainly not. We know conversations are being had. We learned about negotiations with Japan yesterday. President Trump today says he's also talking with South Korea. But for another country in Asia, it seems that we will not be so lucky as to see a deal before midnight tonight, as China is suggesting they will not flinch. And this is a quote, when trouble comes our way. And the U.S. official now telling Bloomberg that the U.S. will be moving forward with what is a cumulative 104% tariff rate on China, effective 11 hours from now.
Yeah, midnight tonight is when all of this happens. You can cue the countdown clocks. Beijing responding, in fact, through China's Commerce Ministry. The U.S. threat to escalate tariffs on China, a mistake on top of a mistake, pledging to fight to the end.
Yeah, and the question is going to be, of course, what is the consequence of that fight, both here at home in China and elsewhere in the global economy? And that is why the U.S. Trade Representative Jameson Greer has been facing some pretty tough questioning in the Senate Finance Committee today about the ramifications of these policies.
Some of those questions coming from Republicans now, more of them, as even Elon Musk begins to openly question the direction of this tariff program at odds with many others in the administration.
Peter Navarro specifically, they haven't had kind words for each other over the last few days. So we'll get into all of that this hour. Get the take from one Republican, Congressman Pat Fallon of Texas, will be joining us in just a few minutes. But first, let's check in on how the markets are digesting all of this. It is an up day, but not as much as we were, Charlie Pellet.
Indeed, Kaylee Lyons, Joe Matthew talking about that midnight countdown clock. I tell you, I'm more concerned about the 4 p.m. close countdown clock as of now, because the gains that we saw earlier on, they are fading fast. Yes, very much in the green right now, looking at an advance of just about 0.4%. But keep in mind, during the early going, we had the S&P 500 index surging by 4%. Right now, we have got the S&P up 19 points, 5,082, where we stand up by 0.4%. Keep it locked into Bloomberg Television and Radio for the latest on these markets. The Dow up 300 points now, up by 0.8%. Nasdaq Composite Index up 20. That is a gain of 0.1%. The 10-year, 4.16%, with the 2-year currently yielding 3.74%. Gold, little changed on the day right now. I'm calling it unchanged at $29.83. We've got West Texas Intermediate crude at 60 even a barrel, down 1.1%. Bitcoin right now down by almost 2%, 77,365 on Bitcoin. Barclays is scrapping its targets for boosting the diversity of its staff across the U.S., becoming the latest Wall Street giant to pull back policies amid pressure from Donald Trump's administration. Shares of Barclays, the ADR, is up today by 1.5%. And for the first time in 15 years, ExxonMobil facing no shareholder proposals this proxy season. Again, recapping, S&P 500 index holding on to an advance of 0.5%, but the key takeaway at this hour, well off session highs. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet keeping us apprised of what was buying the dip action today, maybe less so now as we're right around session lows. Perhaps the optimism that existed this morning around potential trade deals with U.S. trading partners is not necessarily feeling as optimistic anymore, as the U.S. official is reporting once again, or telling Bloomberg, that those 104% tariffs on China will go into effect at midnight, in addition, of course, to the reciprocal tariffs on all of our other countries and partners that we trade with that had already been announced last week. Although this is no surprise, as President Trump did say yesterday from the Oval Office that there was not going to be a pause for breath here.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. They don't want to be in the hands of the Chinese. And the Chinese have turned out to be really not very good at that. People that are with us, they're with us. But we cannot be taken advantage of any longer.
Although, as the president wrote on Truth Social, while referring to impending talks and a great call, as he called it, with the acting president of South Korea, he went on to talk about China. Also wants to make a deal badly, he says, but they don't know how to get it started. We are waiting for their call. It will happen. In the meantime, as Kayleigh mentioned, 104% combined tariffs set to take effect on China. And that's where we start our report from Bloomberg's Tyler Kendall, who joins us live from the White House. Tyler?
Yeah, hey, Joe. So these tariffs expected to go into effect, those additional tariffs, midnight tonight. We have to keep in mind that President Trump had put forward a deadline of today for China to pull back on its planned retaliation that we are expecting to go into effect on April 10th, 34% levy against U.S. imports. We also have to keep in mind that the planned China retaliation includes some targeted action, including export controls against several critical minerals, as well as targeting some key U.S. agriculture sectors. We have to keep that in mind because that's going to keep coming up in these conversations, since we know that that is a pressure point for this White House. Reports indicating that senior administration officials are already starting to think of ways how they could potentially bail out farmers down the road if there is a significant loss when it comes to the U.S. agricultural sector. Also, as we look forward to what it could potentially take to make a deal, we do know from a statement earlier today, China saying that they would prefer a dialogue to resolve their disputes, but they are vowing to fight this until the end. You mentioned there that President Trump kind of reached out there of saying that he is waiting for the call from China, as we learned that some of these other countries are starting to call in, including South Korea and Japan.
Well, and I'm assuming we'll hear more from the White House just moments from now, Tyler, as the White House Press Secretary Caroline Leavitt is scheduled to hold a briefing this hour. But President Trump also has an EO signing on his agenda later this afternoon. What can we expect to hear from him then?
Yeah, so Kayleigh, this executive order that he's expected to sign has to deal with American energy. According to our reporting, he's expected to try to designate coal as a critical mineral. We were just talking about critical minerals there, as well as try to boost mining of coal in the U.S. And Bloomberg News reporting that this is indicative of how this White House is trying to boost energy production when it comes to artificial intelligence, as well as data centers. Yesterday, as you know, President Trump in the Oval Office saying that he thinks the U.S. is leading the AI race with China, but one of the important parts to keeping that edge will be this electricity production.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. Now, as for how all of this is feeding into financial markets, we just got the run through from Charlie. Again, we are well off the highs of the session. What was at one point a 4% gain on the S&P 500 is now a gain of just 0.5%. And we want to get more on that now with Bloomberg cross-asset reporter Emily Grafeo. So, Emily, what was, it seemed, a buy the dip rally is fading pretty fast.
Yeah, we were experiencing our highest intraday jump in the stock market since November 2022, and that's fading. I think, Kayleigh, the rally is a little sensitive right now. People kind of came in this morning and were buying. It's faded a bit, but really the word on Wall Street is that we just don't know how this is going to end. We don't know where to go next, but one thing is certain, and that is that volatility is high. When you look at the dip buying impulse, I write about ETFs, so the data comes in like day after day, so we don't know the buying, at least for today, but we did see yesterday that impetus still to buy the dip. You look at the ETF TQQQ. This goes 3 times leverage on the NASDAQ 100. It had its biggest inflow ever yesterday, $1.5 billion into that fund. It could be traders, it could be people trying to actually buy shares to short the fund. So it's hard to really glean a signal out of it, but we do know that that impetus, at least to buy the rally yesterday or the dip yesterday, was still kind of showing up in the ETF flows.
Emily, thank you so much. Emily Grafeo, Bloomberg's cross-asset reporter, with her eyes on the markets. We'll see where we're at by the time we're done here at 2 o'clock. Remembering we had sizable gains when the opening bell rang this morning, as Kaylee mentions, might be petering out a little bit here based on some of the news flow that we've been following. Congressman Pat Fallon, the Republican from Texas's 4th District, is watching all of this happen and joins us now live on Bloomberg TV and radio. Congressman, it's great to have you. We've been hearing a lot of concern from both sides of the aisle, certainly in this hearing this morning with the U.S. Trade Representative, about the impact of these tariffs and exactly what's going to happen after midnight tonight. Are you hearing a coherent message from the White House that you can support? Is the president going to make the country stronger at midnight tonight?
Absolutely, and I am hearing a coherent message, and that is that there are I just was with leadership, and they had just gotten off the phone with President Trump, and he said to them there was about 70 countries that have reached out to the administration and want to negotiate trade deals. So what it looks like it's shaping up, and I'm not going to panic at all, and I don't think anybody should, because things like this, you know, days and weeks, they should be measured in days and weeks. They should be measured in months and years, and I do think that we're going to see trade deals, really a cascade of them, that will strengthen this country, will put us in a better position, and I think the economy will show more strength.
Well, Congressman, as we consider that kind of time horizon, what are you telling your constituents about what they should be bracing for in the days and weeks ahead in the more short term compared to what you just described as the months and years ahead? Because this is consistently how we see it framed by this administration, short-term pain for longer-term gain.
I think really what you're asking, Kaylee, is how short-term is short-term? Is it going to be a few weeks,
exactly.
A few months, et cetera? Don't have the crystal ball, but what I suspect will happen is that once we see these major countries making deals, like Vietnam, that would be that's a sizable deal. Obviously, the EU would be seismic, and then the markets will see, okay, we're seeing some steady stability, we're seeing some achievement, and you're going to see a slow isolation of China. And then it's up to them to make a deal. I know that they're going to have to save face and whatnot, but this trade war will hurt them way more than it will hurt us. We will experience some pain, no doubt, but they will experience it tenfold. So it behooves them to come to the table as well, and I think you'll see that. You just won't see it immediately for really, I think, egotistical reasons when you deal with an authoritarian